dive into is going to be high intensity. It is going to be quick. I'm going to give you as much information as I possibly can. This is not going to be something where I'm going to talk about one topic and then just be around the bush for the topic for 30 minutes and you're like, okay, can we please get to the answer? I have done boot camps in the past where I have done that, where I've talked about certain things and why it's important and then to kind of went off into analogies and things. I don't want to. I am going to say, this is what we're learning. This is why it's important. Do you understand it? Great. Let's go to the next topic. This is what we're learning. This is why it's important. This is how we use it. We all good? Next topic. We have 4 days here. We have about 8 hours that we can be able to dive into and teach you a 10-year education. And remember, we are going 0 to 100, A to Z. If you are a caveman and just came out of prehistoric times and saying, I want to learn what the stock market is, that's where we're starting. So the very beginning is going to be a little bit of a repeat for you. The very beginning is probably going to be some things that you already know, but every single hour that passes, we are going to get more advanced, we are going to learn more, and we are going to push you to the highest level that you have been. Sound good? So, enough time talking. That's the most fluff that you're going to get this entire time. It's now time to dive right on in, time to go over it all. Let's have some fun. Let's make sure that we're all set, ready to learn, and welcome to the Tradecaster Bootcamp. Let's do it. I'm Sean Dekmar, ready to take on over and teach you guys everything you need to know about stock trading. Let's get to work and let's have some fun. So, the first thing that we want to talk about is the stock market. This is as basic as we could possibly become. Welcome to the stock market. And actually, before we do that, I just got to move myself off to the side here. I'm also going to make myself a little bit smaller, traders, just so you guys can be able to see the slides in a little bit more detail, but I am right here for every single person. So let's head on over and let's again talk about it all. Number one, we are going into it. Welcome to the stock market. Have a notepad, have a notebook, and let's talk. Now, what we want to be able to talk about is this boot camp. Starting on off, we are going to be starting with the basics. We have to be able to build a foundation. For us to be able to build a foundation, we can then build this building of education off of it, but we have to start at level 0. So what I want to be able to have out of this boot camp is I want you guys taking notes. I want you guys asking questions, and it's okay to feel overwhelmed at times. If you are overwhelmed, email me, ask me questions at the end of it, write down a question, but I can almost bet as time goes by, I will be answering your questions so that you're all set. Now, I know what it takes to succeed, okay? To be successful in the stock market, I need to tell you what you need to do. Because once you watch this bootcamp, you're going to go ahead and start opening up a brokerage. After you watch this bootcamp, you're going to be excited to go ahead and make your first trade. But I want to actually lay down the rules of law of what it takes to be successful. It takes, number 1, education. Number 2, experience. You have probably heard me say that before in the past. You must be educated to have success. But you not only have to be educated, you also have to be experienced in your education. I could teach you how to fly a plane, but not until you actually get up there and learn how to fly it will you be able to understand, okay, this is what I read in the textbook to now applying it in person. Everything that I teach you right now, I want you guys to go open a paper trading account and then apply it. Get the hang of it before you guys become successful or before you start trading real money. I want you to learn everything I teach you here, then apply it to fake trading, get a great grasp before you go to real trading. Okay? So what I always say is my rule, 3 months of paper trading, successful paper trading until you become a full-time trader or until you start trading real money. The reason why I say this is because so many people say, hey, Dek, I've been stock trading now for the last 8 years. I say, how much money have you made? They said, oh, I've never made any money. So you really haven't done anything. You have been practicing bad habits for the last 8 years. If you cannot pass a paper trading account, if you cannot grow a small account, what makes you think that you can grow a large account? What makes you think that you're going to take the last 2, 3, 4 years of hard work, throw it into the stock market, and bada boom, you're going to be a successful stock trader? That's not how stock trading works. You have to put in the time. If you want to be a doctor, you have to put 8 years of work in. If you want to become a lawyer, 8 years of working. If you want to become a teacher, 4 years of a bachelor degree. You want to be an accountant, 4 years of a bachelor degree. I want to be a stock trader. Oh, Dek, I just opened up a Robinhood account. That's not how it works. We have to have realistic expectations and be willing to grind. That's what this video is about, grinding. So, What is paper trading? What do I mean by fake trading? Every single broker that you guys log into, they will have simulated trading, which will be real-time markets, real-time value, real-time prices, and they will give you fake money to practice. This is absolutely amazing. This is absolutely great because you don't have to take any sort of risk, and you could be able to invest in the stock market to see where you're at and seeing how you're doing. Now, what a lot of people will realize is that they become more successful in paper trading than they do with their real money. Now, why is that? Why do they become more successful with paper trading than they are with real money? And I know a lot of people have probably gone through this before. It's because when you're paper trading, you don't have any emotions. When you're paper trading, you just say, hey, it's all fake. Let me go ahead and just do whatever. And if I win, I win. If I lose, I lose. And the thing is, when you have real money, you become more hesitant. Now, I don't want you just randomly gambling and paper trading. I want you taking it as serious as possible. One of my favorite thoughts about this is if you guys ever see the movie Apollo 13 with Tom Hanks, the very first scene, they're sweating in an astronaut rocket ship. And they're trying to, again, connect one ship to the other ship. And guess what? Freddie kills them. And you don't know it's a simulator because how intense they're taking it. They're sweating. They're acting like it's real because they know when they go up in space, if they can't do it right now, guess what? They're going to die. And it's the same exact way you have to start off with your stock trading. So many people get caught up in the Wall Street bets. So many people get caught up in the Lom life and the social media and the Lamborghinis and yada, yada, yada. You can't do that. You have to be able to take time and say, if I can't even grow a paper trading account, I won't be able to grow a real money account. So why skip this process? If you have $2,000 in real life, you're paper trading with $2,000. If you can only trade at 9 a.m. in the morning, you're only trading at 9 a.m. with a paper trading account. There are times to go ahead and have fun and be crazy and just see what happens. But you have to be as specific as possible in your paper trading account to be successful. Not trade with $1 million and then in your real life account, you have $2,000. It's like basically trying out for the basketball team and practicing with a volleyball the entire time when, again, you have a basketball. There's no help. There's no correlation. Sure, it's fun to mess around every now and then, but if you're going to paper trade seriously. That's what it all comes on down to. So you can, again, paper trade on your broker. You can paper trade on Cobra Trading, which is my favorite broker in the world. And, of course, DOS Trader, which is what we use. Now, you guys can also track your trades. Tracking your trades is extremely important, and you can do it just on an Excel sheet. There are many different softwares out there to be able to help you get a trading journal, and I'll give you guys one at the end of this lesson. But at the same time, you guys can just open up an Excel sheet and be able to become a better trader. You want to be able to study and digest your trades. I think the best way to be able to learn is to be able to record yourself, just like I do right now, just like I'm doing with every single trade. I think I've gotten to the level that I'm at right now because of the fact that I record every single trade that I do. When I record my trades, I get to rewatch them and I get to put myself back into that present moment where I say to myself, what was I thinking? What was I doing? How many shares was I going after? What was my game plan? That is what we want to make sure that we understand. When you record yourself trading, you can talk out loud. You can be able to say exactly what you're feeling, and then you can rewatch it later on. Every single person can do this. You guys can get a microphone. A lot of computers already built in with a microphone. You can get a webcam. A lot of computers already have a built-in webcam, and you can just download OBS. OBS. Go to obs.com, download it. It's 100% free. You can record your live stream, record yourself, record your emotions, record your talking, record what you're doing. And you know what? A lot of people are going to learn from this. In the moment, you don't feel like you're doing anything wrong. When you rewatch it later on, you are doing something wrong. The best way to be able to think about this is sport athletes, right? I love golfing. In a moment, I'm just slicing a ball off to the right, slicing. I don't know why it's happening. I rewatch again, let's say my swing, I realize I'm doing something wrong. I'm a football player. I'm throwing interception after interception after interception. In the moment, I'm saying, how are all again these footballs getting picked off? Guess what? I realize again, I'm doing something wrong. When you rewatch yourself trading, you could be able to figure out, what did I do wrong here? Did I again not have a stop loss? Was I over trading? Was I again going too heavy too quickly? What was the reasoning behind it? So being able to track your trades and get a better understanding of your trades is going to be a crucial part of success. Now, trading journal guide here. Traders, you guys can pause this video later on. You guys can come back to it. You guys can take a screenshot of it. These are, again, going to be things that you just want to be, different terms that you would just want to be aware of. Same exact thing with stock trading acronyms here. HOD, high of the day. EOD, end of the day. ON, overnight. Stock traders, we don't like to waste time. We know time is money. The moment a hot press release comes on out, a stock can go on a big time breakout. The moment a big time stock goes on a big time move and I need to alert it to everyone, I might just say NHOD, new high of the day, stock XYZ. Typing things on out might take crucial seconds that are not worth my time because I could go ahead and make money during, again, very quick plays. So the thing is, pause this video as well. You guys can be able to learn these acronyms that you'll see a lot of times on StockTwits or Twitter or over in the Tradecaster chat room. Now, let's begin. When you think of the stock market, what comes to your mind? Everyone take a second right now. When you guys think of the stock market and you close your eyes, what comes to your mind? For me, again, I think of numbers. I think of math. I think of graphs. I think of all these different things, different moving charts and different arrows. Some people might say, Deck, when I think of the stock market, I think of rich people and confusing and I don't really know what's happening. And that's absolutely fine because that's how a lot of people think of it. They don't really know what's going on in the stock market. Now, why are we not learned? Why don't we go to school and learn about stock investing and stock trading? Well, the thing is, guys, it is risky. We need to understand that a lot of traders are going to have this information go through one ear and out the other, and they're going to be blinded by greed. I will tell you right now that I believe it's like 95% of stock traders fail. 99% of stock traders fail. Why is that? Why is there such a large amount of traders fail? There are people watching this video right now that they are going to fail. And it's because they don't put in the necessary work. They got the little hype inside them right now. They got that fire that's burning saying, I want to become a stock trader. I've seen how much money people make. And then guess what? It slowly dies on off the moment they realize they have to do work. Oh, wow, this isn't, I can't just make $1 million overnight. Traders, I think stock trading is a lot like fitness. Day one, when you go to the gym, you're inspired, you're motivated, you're saying to yourself, I can't wait to get those six-pack abs. I can't wait to get those big muscles. I can't wait again to go ahead and impress that girl that I absolutely love. But at the same time, day one's easy. Day 7, you're a little sore. You maybe, again, said you're going to show up 4 times a week to the gym. You're now at 3 times a week. 2 weeks in, you're down to 1 time a week. You're sore. A month goes by, you're saying, I'm over it. I don't want that in your stock trading career. I want you to realize that there is so much positivity at the end of this, but you have to be willing to grind. And I think that's the reason why it is so addicting once you learn it. Once you figure things on out, it is so addicting because you're saying to yourself, this is incredible. I can be able to learn how to trade. I could be my own boss. I only have to work a few minutes a day at times. Yes, those are all amazing perks, but it's after hours and weeks and months and years of putting in work, right? So, day trading is amazing, traders. Day trading is the act of getting in and out of a certain stock in a very short period of time. Now, the thing is, why are we never taught how to day trade? Well, guys, day trading is relatively new. Right? When we think about, the internet, I remember I grew up in 1993 is when I was born. I remember I didn't even have the internet in my house until like 1998, 1999. I went the first 6 years of my life with no internet whatsoever. Then, of course, day trading got more popular with apps, right? Now we have Wall Street Bets. Now, again, we have the ease of computers. Before, again, you were calling up your broker saying, put me in on this play, and again, leave me in it. Now, again, we can be able to essentially be our own broker where we get in and out of plays. We make these decisions. We have the ease of the internet, apps, computers all in front of us. So when you think about it, we are like the first generation of day traders, first generation of being able to have this opportunity. What an amazing privilege, right? So what we need to understand to be a successful stock trader is going to be, what is the stock market? What are stocks and what are shares? Right? Let's just go back to the basics here. So what is the stock market? The stock market is where investors connect to buy and sell investments, most commonly stocks, and where shares of ownerships are in public company. After you purchase your first investment, you'll join the ranks of investors around the world who are using the stock market to build long-term wealth. Essentially, guys, the stock market is just one big marketplace for stocks, aka companies. And you as the public can go ahead and have ownership inside these specific stocks. And as the company does well, you are going to be able to generate wealth. As the company does well that you invested in, your investment is now going to grow with the company. And this is where the majority of millionaires are created. If you want to be a millionaire, there's only 3 ways to actually become wealthy and have generational wealth. You guys want to know the secret? It's number 1, start your own business. Entrepreneurs, they again do great. If you have a successful business, you can make a lot of money. Number 2, real estate. Real estate, absolutely amazing. When you own property, when you own homes, when you own apartments or hotels, you can make hundreds of millions of dollars. Absolutely incredible. And number 3, stock investments. Investing into the stock market. Now, when you think about millionaires, the thing is, millionaires usually have all 3. They have some sort of real estate. They have some sort of rental property. Maybe they have some sort of business or side hustle. And of course, they have money making for them. That's the stock market. That's investing, putting money into companies where they know 6 months down the line, they could be having 100% return, right? That's incredible. Now, the stock market traders, the S&P 500 on average returns anywhere between 10 to 15%. Now, the thing is, over the last 2-3 years in 2022, 2023, 2024, into 2025, we've been seeing massive returns. Not so much in 2022, but 2023, we had around a 23% return. 2024, we're up towards around 20% return. Right now, we have the S&P 500 currently up around 10%. It's great to be able to know that when we take a look at the S&P 500, we are going to be able to consistently grow. Take a look at what we have right here, traders. When we take a look at the S&P 500, let's go back into the monthly chart. The S&P 500, when we take a look back over into the monthly chart, we can go all the way back down to 2009. The S&P 500 is the top 500 companies in the United States. These are the best and highest and most productive, most profitable companies in the United States. When people say they're investing into the stock market, most of the time what they're referring to is they are investing into the SPY, the S&P 500. You could see we have gone from $97 all the way up to $643. Because when you invest in the SPY, you are looking for a safe, slow investment. Now, do we have recessions, aka times that are bad, times that we see negative GDP growth? Do we have times that we have of 2008 or the dot-com bubble or the Great Depression? 100%. Those times happen. Were there times back in 2022 when we raised interest rates and the stock market fell? When we again crashed during 2020 when we all had to stay inside because we couldn't go outside without a mask? Do you guys remember that? All of those times were scary. But the thing is, every single one of those have recovered. 2008, we recovered and we hit record highs. 2020, we recovered and we hit record highs. 2022, we have recovered and we have hit record highs. The dot-com bubble, we have recovered and we have hit record highs. The Great Depression, we have recovered and hit the record highs. We are in the United States of America. We have some of the strongest businesses in the entire world, the most profitable businesses in the entire world. And I know it's a little crazy to say, but yes, over time, the S&P 500 only goes up. There are times of pullbacks, there are times of fear, and there will be times of recessions and bubbles and drops. But look what would happen if you said, oh, Dec, I'm going to invest back in 2016, 2018, 2020. You would be up exponentially. You would be up almost 100% on investment. I mean, that is absolutely insane to be thinking about. One of the biggest pieces of wisdom I could throw out there is I don't care if you're 16 years old, if you're 30 years old, if you're 45, if you're 50. You want to start some sort of retirement account as early as possible. When you throw money into the stock market and you forget it, let's say you put money in the S&P 500, over 8, 9, 10, 20 years, you are going to generate hundreds of thousands of possibly millions of dollars. No one wants to be 65. No one wants to be 70 years old and says, I still have to work the rest of my life. If you start putting money away now, you can know that the S&P 500 over time is going to continuously work itself on up and continuously grow. Now, even if you only put $1,000 in, it's going to grow. You put in $50,000, it will grow. You put in $100,000, it will grow. They say the first $100,000 will be the hardest $100,000 you will ever have to make. And the reason why it's so hard to be able to get to that 100,000 price point is because once you get to 100,000 or once you start trying to grow it, it takes a long time to compound that 100,000. Put $5,000 in, you might only make, $500. You put $10,000 in, you make $1,000. You put $50,000 in, you make $5,000. But once you start putting in $100,000, after again, let's say 8, 9 years, and your compound interest finally grows on up, now again, you have $100,000. Maybe on a bad year, you're making still $10,000 a year from doing nothing. Then as time goes by, maybe you started this retirement account at the age of 20, 30, and now you're 40 years old. You have $1.5 million. You're making off of nothing, $150,000 a year. By the time again you're 55 years old, you have $3 million, and you're making $300,000 a year from doing nothing. This is how generational wealth is created. This is how people are set for retirement. This is how you see, again, a whole bunch of old people dancing and living it up because they have set themselves up for success. Now, let's not be naive about this. I completely understand that we live in a world where it's hard to save. We live in a world where, again, some people live paycheck to paycheck. I completely understand that. But that's why I say the earlier you start and even the smallest amount you put in will have an impact in your life as you get older. You must understand that because the proof is in the pudding right here. You can see how the market consistently grinds even during tough times. So that's why the stock market is so incredible. That's why the stock market is so amazing. Now, let's think about this. The stocks. What are stocks? Stocks, also known as equity, is a security represents the ownership of a fraction of a corporation. Stocks are bought and sold predominantly on stock exchanges, though it can be private sales as well. How do stocks work? Companies sell shares in their businesses to raise money. They then use that money for various initiatives. So traders, investors, everyone listening right now, what is the point of someone going on the stock market? Well, if you are a business that needs to raise capital, you are going to put yourself on the stock market. Now, the reason why we do this, Bill, because there are public companies and there are private companies. Some companies say, we don't need funds. We have all the funds we need. We want to stay private. We want to be able to do what we want to do. We don't want to have a big board of directors and anyone have any sort of say. People like to do that. But if a company is trying to achieve their goals and they're saying, hey, we're trying to achieve our goals, but we just don't have the funds. We don't have the cash to be able to do this. You know what? Let's put our company on the stock market and allow other people who have the same vision that we have to be able to invest into us. So let's say, again, a company has $10 million and they're trying to figure out a brand new drug, a drug to be able to cure cancer. And they say, hey, we burned through our $10 million. What can we do now? Well, I can't get another $10 million in the bank or, again, this guy or this guy. So you know what? Let's put it on the stock market. And all of a sudden, people say, wow, I like this company. I'm going to invest $5,000. I'm going to invest $20,000. I'm going to invest $100,000. And let's say thousands of people do that. Well, now, guess what? Now, again, people are committing themselves saying, I believe in this company. Here's money from me to you to go ahead and get a better product. And I get in return ownership of your company. When you again say, here's $20,000, you get a piece of that company. You give me the 20 grand. I can now work on, again, this drug treatments. You have a small percentage of ownership. If we do successful in our trials, if other people invest into our company, you own ownership here. And now your $20,000 is going to be worth more when you want it later on. That's how stocks work. Stock says, hey, I'm a company A. I'm on the stock market. Invest into me. We can grow together. And that's why people love, again, being involved in the stock market. We talked about the 3 ways of generational wealth. One thing is an entrepreneur. Well, guess what? You're essentially an entrepreneur when you are a trader. You are a business. You are a CEO and you are running your own little firm. And you're saying, I want to be able to grow my business. Well, how can I grow my business? By investing into other great potential businesses. So a stock is going to equal our partial ownership. Now, what are shares? Shares are going to be the units of equity of these ownership, interests, and corporations that exist in a financial asset, providing an equal distribution in any residual profits. So basically what we have here is we have the stock market. The stock market is going to be the entire marketplace. We're going to have our stocks, aka businesses that are on the stock market, and the shares are what we're buying of the company, representing our ownership of that company on the stock market. So it basically just kind of keeps dribbling down the line. Shares are going to be what you see on your broker, how many shares of a company you own. The more, again, you own, the more you probably have to buy, the more investment it's going to take, but also the more you can make. Stock trading is a game of money, ladies and gentlemen. The more that you invest is the more you can make. The more you make, the more happy you're going to be. But at the other side, if you're wrong, you can lose more money quicker. So you do have to be very careful on how you're going to be trading. So how do we make money in the stock market, right? Let's say we purchase stock XYZ for $23. Stock rises up to $31. Maybe a lot of people invest into the play. The stock moves on up. Maybe again, they come out with great drug trials. The stock moves on up. We sell at $31. We are going to be able to make an $8 profit. Now, $8 profit on those shares, absolutely. But the thing is, traders, a lot of people are going to not just buy one share. People are going to buy hundreds of shares. Thousands of shares. So again, if you have 1,000 shares and you have an $8 move, you're now going to have $8,000. And this is the absolutely beautiful thing about people investing money. Stock trading is a game of the more money you have, the more money you can make. So make sure that you guys understand that when you are first starting off, you might not see that $20,000 gain, that $20,000 day, because how you have to trade definitely comes down to percentages. A lot of people always think, oh, wow, this guy made $20,000 in a day. Well, traders, let's think about this here for a second. If I have a $100,000 account, I'm trading with $100,000. You're trading with $10,000. And I make, let's say, a $3,000 profit. Okay? Now, you go ahead and you make a $3,000 profit. Who's the better trader? God, you are. You absolutely crush that trade. If I make a $3,000 profit, that means I made a 3% return on my investment. If you made a $3,000 trade, guess what? You just made a 30% return on your investment. So the thing is, don't get lost in the sauce by looking at social media or looking at other people and saying, oh, wow, that guy made $25,000. That guy could be trading a $100,000, $200,000 account. If you are, again, making $2,000 and you only have a $2,000 account, you made a 100% return, which is probably better than Wall Street, better than the majority of people on the internet. You have no idea how much some people are trading. So the thing is, always understand your percentage return. Well, Deck, what's a great percentage return? Anything over 10% is an amazing return. If I have a $100,000 account, I invest it into a play, I make $10,000. That's a great return. It's very rare to see people make 10%, invest $20,000 and make $20,000 within that same day or that week or that month. That's where, again, day trading sometimes gets a little fantasy land. You have to understand the percentages of return that you have. Okay? So let's go into some very quick, easy terminologies, just continuously building up these fundamentals. Buy, take a position into a stock. Sell, to sell the shares that you own. Bid, to be the bid side is going to be the buyer side. So this is a level 2. We're going to dive into lessons on level 2, but the bid is going to be buyers or buyers to be. These are people that are setting limit orders at a certain price, saying, please fill me. If you want to sell me your shares, this is where I will buy your shares at. The ask is going to be the opposite side, potential sellers, people that have their shares up for sale, and you as a buyer can go ahead and take those prices. The bid ask spread is the difference between the bid, the buyers, and the ask, the sellers. If there's a spread between it, let's say there's one at $1, this one's at $2, there's a $1 spread. Bull market, a great time to be investing when stocks tend to go on up. Bear market, a time when we start seeing a lot more weakness and we start seeing dropping in the market. A market order is a very simple order where when you click buy, you're filled instantaneously. A limit order is where you set the price that you want on a specific play. Once again, that price comes down, that's where you will then be filled. Volatility is going to be how active a stock is. When you have a high volatile play, you're going to have a stock with a lot of movement. More movement equals more money on the upside or possibly on the downside. Market liquidity, the measure of a stock's ability to be bought and sold more quickly. Usually this comes down with more volume, more amount of people, more shares being traded. You are going to have high liquidity. Trading volume is the number of shares of being traded from hand to hand. Another way to put this is almost like volatility, almost like liquidity, where we are saying there's a lot of action, there's a lot of volume. It's the shares traded from hand to hand. So if we have 100 people buying, or let's say 100 shares are being bought, 100 shares are being sold, we now have 200 in trading volume. Going long is the same exact thing as buying a play. Another terminology. Going short means you're betting against the company. Averaging down means you are in on a position at a higher price point, but as the stock falls, you buy in more shares, which lowers your overall average. If I bought a stock at $100 and it falls down to $50 and I buy the same amount of shares at $50, now again, I have a position at 100, I have a position at 50, my new average price is going to be 75. Averaging down is a technique people use to bring down their cost basis, aka their average, hoping that they get a dip buy and now they're getting a lower price point. Float is going to be how many shares are available to the public. The lower the float, the higher the demand, the bigger the spike we can have. The float is just the size of how many shares are available to the public. When we have a low supply, when we have a low float, the stock can be extremely volatile. When we have a higher float, it usually tends to be a little bit slower. It's going to be harder to push around. Outstanding shares. This is the total number of company shares. It includes both public float and restricted shares. So these are going to be some of the top things that you guys need to understand. Now, obviously, I'm going to be able to send this to every single one of you guys. You guys do have it recorded, so you can always go back and be able to check out every single one of these moves so that you guys are all set, ready to rock and roll. Now, before we go any farther as well, I do want to go over some great websites and tools that you can be using to make sure that you become the best stock trader that you can possibly be. Sound good? So, what are the tools that I'm using? Because starting on off, I want to make sure everyone understands what I'm doing, where I'm at, and what I'm currently at this moment. So starting on off here, traders, is let's go ahead and take a look over on these charts. These charts right here, and let me actually bring up my live trading charts here. My live trading charts. Everything that you see, you want to be using the best equipment possible. I always say you could be the greatest race car driver in the world, but if you don't have a great race car, unfortunately, you're just not going to win. If you want to be a successful stock trader, yes, you need to be educated. Yes, you have to have experience, but at the same time, you have to use great equipment. If you are not using the best equipment out there, you're going to be slow. You're going to be behind. You're going to be missing out on plays. So it is crucial for me to be able to make sure that every single person understands what is the best equipment out there for you to become the best trader possible. So number one, Deck, what is on your screen right here and right now? How can I get the same exact screen? Number one, you guys are going to want to be using Trade Ideas. Trade Ideas are going to be the scanners that you see. The charts here, the high of the day momentum scanner, the breakout scanner, Trade Ideas, you guys can go ahead and check them on out. Let me bring up the link right here so you guys can go over towards it. If you guys do type in the word DeckMart Trades, you guys are going to be getting 15% off. But again, we do have Trade Ideas. They do have pricing there. You guys can go ahead, check it on out. You guys do get 15% off as well over on Trade Ideas, right? One of my favorite tools to be using. Now, my absolute favorite scanner is going to be right here. The number one question I get every single day is people say, Deck, how do you find the best plays of the day? How do you know what stock to get yourself involved in? Deck, how do you know out of 10,000 different plays, how do you know what to trade? Well, it's very nice when the answer is given to you. See, the thing that you have to understand is stocks move for specific reasons, aka hot news comes on out. You want to be able to use a scanner that shows you all of the news every single day. Why is HCWB up? Because it had a press release. Why is CAPS up? Because it had a press release. Why is STSS up? Because it had a filing. Unfortunately, there's no magic way just to know whatever stock is about to spike. You have to be studying hot news in pre-market and finding what's the best plays here. Like for instance, if I want to say, okay, hey, what the HCWB going? HCWB went from 345 up to 617 right here. How did I know that? Well, because it did come out with hot news right here. If I want to take a look at all the best plays of the day so far, OSRH, HCWB, CAPS, Deck, I want to know what Nancy Pelosi is buying right now. You know, everyone talks about what is Nancy Pelosi getting herself involved in. Okay, great. Let me go ahead and look at her portfolio. Oh, she's buying AVGO or NVIDIA or Amazon. Hey, Deck, I want to be able to, whatever that could be. This right here is Fox Runner. So again, Fox Runner is how I find all the plays every single day. So for me, guys, what I always like to do is I always like to be able to find the hottest stock every morning. That's going to be right here. Then on top of that, I then do research on that play throughout the charting. So it's basically, again, Fox Runner and Trade Ideas are basically like my ham and egg. It's what I got. It's my left-right punch. It's going to be Fox Runner gives me the best plays of the day. Trade Ideas is going to be where I do my research for that trade. Does that make sense? If I don't have Fox Runner, I don't know what to research. If I don't have Trade Ideas, I can't really dive into the chart a lot more. Okay? So Fox Runner traders, if anyone did not see this, Fox Runner actually just became free for, again, limited access. So if anyone has not checked that on out, you guys can actually head on over to foxrunner.com. And you guys will be all set. Live news to the stock exchange in one play. And you also do get a free 30-day pass, but they actually just made Fox Runner free. So you get limited access with the free version. And then, of course, if you guys are on the paid version, you just get way more access. So that just came on out. Little heads on up, but that's how I get all the news every single day so that you guys are all set, ready to rock and roll. Now, also on top of that, traders, we did talk about what is going to be the trading journal. We talked about learning and becoming the best trader that you could possibly become. Trading journal, studying. Well, we live in a world now that, again, it's all about AI, artificial intelligence. This right here, team, you guys can check this on out. I'm the only person with this. If you type in the word I'm going to show you right here, 14-day. Type in 14-day with a capital D. This is a brand new AI trading journal that's going to link to your broker and tell you if you're over trading, what you're doing wrong, what you're doing right, where, again, your risk management is, how to become a much better trader. So if you guys have not checked this on out, you guys also do get a free 14-day pass over on this as well, so that you guys are all set, ready to rock and roll. Let me grab that here for you. And you guys will be all set, ready to get after it, ready to make this money, and of course, continuously crushing it. Last but not least here, team, I do want to go over my broker. My broker is Cobra Trading. Absolutely incredible. My favorite, again, broker in the entire world. And you guys can be able to sign up over on Cobra Trading, and you guys will be all set, ready to go. If you guys do type in the word Deckmar Trades over on Cobra Trading, you guys will be all set. And you guys will get tons of discounts. Let me see if I can grab a quick little link over on Cobra Trading for you guys. And you guys will be all good. Man, but as we said, that is the first little bit of just the introduction. Now, I know what some people are probably saying right now. Some people might be sitting here and saying, man, this guy is talking. This guy is getting to work. This guy is getting after it as quickly as possible. I'm telling you, I am not here to waste your time in any sort of way. I'm not here to waste your time in any sort of way. We are going to keep this party going constantly. I just want to give you guys the information. By the end of this, I want every single person saying he went through so much information as quickly as possible, just gave it to us, no fluff, no nothing. He just went straight through it and made sure that we were learning. That's what I want. Okay. Last but not least, here is again the shorting broker that I use to be able to get every single one of my plays. So again, you guys do get a link right here, Deckmar Trades over on Cobra, free month of commissions, 50% off for life, free software as well. So if you guys have not checked this on out, you guys can go ahead and do that, and you guys will be all set, ready to rock and roll. So beautiful. Hey, you guys ready to keep this party going? Let's do it. We ain't slowing down. We're picking on up. Let's keep this party going. Let's have some fun and let's make this money. Also great to see at this time as well. You know, my current trade at this time is sitting with a $1,900 in profit. I love how, again, I'm teaching you guys how to make money. And as I'm teaching you guys how to make money, I'm sitting with a $1,900 in profit. Isn't that cool? So again, MSTR, I'm currently shorting this play, watching to see if this can start dropping. This was a play I jumped in on Friday. Today is Monday, and we're up nearly $2,000 over on this trade. MSTR, as you guys know, I am watching to see this one fade and fall and drop. The big thing that comes on down to is this 50-day moving average. We're going to be talking about that coming on up in a moment, but it's nice. Again, I'm teaching you guys how to be able to make money. I'm currently sitting with a $1,900 profit at this time, but we got to keep this party going. We got to keep moving. We got to keep making this money, and we got to be able to keep becoming the best traders that we can be. Now, we're going into our next lesson, and our next lesson right here at this moment, traders, is going to be understanding orders. Hey, how do we get into a play? How do I get into a stock? How do I get into a trade? Well, traders, you're going to have two different types of ways to get into a trade. That's going to be a market order and a limit order. Both of them are going to have their importance. Both of them are going to be important for different reasons. So let's talk about it. What is a market order? A market order is going to be the easiest way to be able to get in and out of a trade. A market order is simply enough going to be you click buy, you're in. Now, how do I know where I'm getting in at? You are going to get filled at whatever is the best current asking price. Well, Deck, how do I know what the best current asking price is? That's a great question. The best current asking price is what you see over on the level 2. So for instance, ASST is the stock that the level 2 is currently on, ASST. If I click market order, let's say I do 100 shares and I go ahead and click buy right now on a market order, that's going to get me filled instantly. The moment I click buy, I'm getting filled. Now, where am I getting filled? At the ask. The ask is the right side. So there are people willing to sell at 512, 300 shares at 512, 200 shares at 512. Now it dropped on down to 510. So if you ever see a stock that's moving extremely quickly and you want to get in on it, you click buy market order, you're getting filled at whatever price is on the ask. Deck, what if I want to get out of the play? If you want to click sell, right, you get out of the play, you click sell, you are going to be getting filled at whatever play or whatever price is on the bid, aka buyers. The left side is the buyers. The right side are the sellers or shorters. If you want to get out of a play, you're going to get filled at wherever someone is willing to be able to sell you their shares at. If you want to get into a play, you are now getting in on a play where someone is willing to sell your shares, and the last one was someone willing to buy your shares. So this is the quickest and easiest way to get into a play. Now, market orders, I do use them a lot because remember, stock trading is a game of time. The quicker we can get into a play, the easier it is for us to be able to make money. But there is some drawbacks as well, guys, right? We know the pros. You get in, you get out right away. It's quick, it's easy, it's simple. You click the button buy, you're in. You click the button out, you sell, you're out. But what's the con? The con is you're not going to be able to pick the price you want. You are going to have whatever the ask price is, that's the price you're getting filled, and whatever the bid price is, that's the price you're getting out of it. Now, what if I want to go ahead and pick the order that I want? That's where you're going to have to use a limit order. Now, you might not get filled on a limit order, right? Because the stock has to come down to the price that you want. Market orders is all about instantaneous access. So when do I use the market order? I tend to use market orders on selling. I usually do limit orders to buy in, market orders to sell and get out. Now, the reason why I do a market orders to sell and get out is because I play a lot of volatile plays. And as we know, volatile means, again, high action, high activity, very quick movement. If I want to get out of a play, let's say I'm up $1,000 and I just want to get out instantaneous, I click sell. Now, again, the issue with clicking sell is sometimes if there is a little bit of a spread, aka the difference between the bids and the ask, I might see $1,000, but the time my order gets filled, instantaneous, it's getting filled at whatever someone is willing to buy it at. That might be slightly lower. Not a huge amount lower, but slightly lower. And instead of me getting that $1,000 profit, maybe I only get $960. But for me, I'm not being greedy over $40. If I'm up $1,000 and I see that it's a very quick, very active play, I click sell to get out very quickly. I might have a little slippage, aka I see $1,000, I only get $960, $40 in slippage. It's still worth it for me just to be able to lock in those profits as quickly as possible. Now, a limit order is going to be something that's referred to as a pending order. This is where you pick the price that you want to get in or you want to get out. And when you get in or out of these plays, this is great because you are going to prepare. You are going to have the exact plan. Now, remember, a market order, I'm just getting filled because of maybe hype, momentum. Maybe I want to get in really quickly because I see the stock spiking. I don't want to miss out. Limit orders could be, I want to get in because of this specific reason at this price. I want to set a dip buy at the price of $10. When it comes down to the price of $10, that's where I get filled and then I go on up. I don't get filled unless it comes down to $10. So that's beautiful. We could see a beautiful uptrend, let's say on a specific play of $10, and we want to get filled at this mark. Once you get filled at this mark, we can then ride it on up. We could switch out to a market order, get out, or we could set a sell order up high to $12. I get filled at $10. Boom. Set a sell limit order at $12, gets filled at $12. Absolutely great. So for me to be able to do this, limit orders are always going to have to be lower. So Deck, let's take a look. ASST, let's say you think there's going to be a bounce play back down to 465. What you would do here, switch over to a limit order over on your level 2. Level 2 is where you place orders, and you go over towards the price of 465. Once you click 465 right here, traders, what do you guys think is going to happen? Now you're going to have a pending order at the price of 465. When you have a pending order at 465, you are not filled until the price goes to 465. So you can't do a limit order up high, only a limit order down low. If I said, hey, Deck, I want to do a pending order, I want to get filled at $5, and you click buy, you're automatically going to get filled right away. Because guess what? You can already get filled at $5. If you're looking for a no, Deck, I want it to be able to wait for a breakout of $5. Those are going to be special orders and a little bit more advanced. Right now, limit orders, you can only set low. Now, after you get filled, let's say at 465, I want to get out when it bounces back up to $5. Great. Then you go $5 and you click sell. And that means limit order, $5. When it comes up to $5, we will sell your order. Beautiful. Very simple, very easy. The best way that I think about a lot of times, guys, market orders and limit orders is I think of, it's kind of more of a funny way, is I think of like a market order a lot more chaotic. It's like a heavy metal band. It's just craziness. There's like a mosh pit going on. It's nuts. The way I think of a limit order, guys, is going to be a lot more, eloquent. A lot more slow and steady, drink a nice crystal bottle of wine, right? It's very perfect in any sort of way. So you can go with the craziness, get in, get out, try to make that quick money. Or again, go very slow, peaceful, follow again your game plan the way you would like. So again, what are the pros of limit orders? You decide what price you get filled at 100% certainty. You will not be filled if your entry is not touched. The con though, again, it's sometimes hard to predict exactly where a stock is going to go down or go up to. There will be multiple times you might set a limit order at $5, and guess what? It comes down to $5.05, and then it bounces, and you missed out on it. And if you just did a market order and just got filled, at least you were able to make some sort of money. And also, again, they're a little bit slower. That you have to sit back, you have to wait for your order to be filled. So when would be the greatest time to be able to use some sort of limit order? When do I want to pick a price and not get filled off that price? Well, again, a bounce play. I think $5 is going to be a great bounce play. A dip buy, right? A slower play that I could be able to have time to figure out. It is preferred that you guys use a limit order because that means you're going to be able to follow a stricter and closer and have a better game plan. But at the same time here, ladies and gentlemen, what I want you guys to know is that a market order is going to be quicker, easier, faster, and potentially can make you money. At the same time, limit orders is going to be slower, is going to be more predictable, it's going to be more profitable if you can get filled. That's what we like here. So, market order, get in instantaneously. Limit order, you're going to set the price, right? So, we basically went over all that, and we talked about that over on the level 2 as well. Basically, again, just getting in and out of your plays. Market order instantaneously. Limit order, we are setting the prices we want. Those are going to be the 2 main orders. Now, if you guys do your drop down menu right here, you guys can already see there are a million different ways that you guys can possibly trade. You guys can be able to do limit order or market order or stops or free or TW or this. I will say right now, 99% of traders just stick with limit orders and market orders. I use limit orders and market orders, and that's essentially it. That's it. Limit orders and market orders. I don't need to do anything else. I don't need to do anything else too wild. I don't need to do anything that's too crazy, right? All I'm doing at this time is simple limit orders and market orders, because that's what works. Just because I teach you certain things doesn't mean you have to go off and do the most advanced strategies in the world. You could just be able to say, hey, let me do what I know works, what everyone else does. And that's beautiful, and that's amazing. So, limit orders, market orders, understanding the stock market slightly, and again, continuously growing and learning and becoming better day in and day out. So, let's keep this party going, guys. Now, what we want to be able to learn on this next lesson here is going to be indicators. Understanding what are the best indicators. You guys have probably seen this before on my charts. You guys see the red line and the blue line, the green line, the black squiggly line, and you're saying to yourself, what the heck are these things? Well, indicators are simply enough just going to give us guidance on where we should buy and where we should sell. It is going to give us an understanding, psychologically speaking, of where other people are going to buy and sell. Now, let's not get too fast here. Let's understand something, traders. Why do stocks go up? And you might say, well, stocks go up because it has a good PE ratio. Stock goes on up because it has good guidance. Stock goes on up because it has this. Yes, it does. But why do they honestly go up? Because people are buying it. People are investing into that play. People are buying because it has good guidance or because it has a good earnings report, because it has this or that. People move the stock market. If you can figure out what the majority of people do, that's where you guys are going to be able to make the most amount of money. So the indicators that I'm about to teach you, the indicators that I use, are going to be the most popular indicators. And that's what's beautiful. If anyone ever tries to sell you on an indicator that's a super secret indicator, it's bogus, it doesn't work. Because the thing is, stock trading is one big psychological game. I am teaching you how to be able to predict the stock market. 99% of people are just going to go with what everyone else does. Oh, hey, that one's moving on up. Oh, you told me to buy that one. I'm going to buy it. If you just understand and get a little edge on the market, you're going to be able to read these things so crystal clear. So for instance, what are stock indicators? Technical indicators right here, mathematical calculations that help us get a better gauge of what we could be seeing next over in the market. Now, what I'm going to tell you right now is less is more. Do not add a million different things. Stick to about 3 to 4 different indicators that are going to be able to help you. You do not want your chart looking like this where it's so overwhelming you're just going to contradict yourself every 24 seconds, right? We don't want that. We are going to have two different types of indicators, our overlays and our oscillators. We are going to start off though with our overlays here. Overlays are going to be within the chart, within the graph, within the candles, helping us understand where support and where resistance is at. Support is where stocks bounce off of. Resistance is where stocks get rejected off of. We will have our oscillators though, which is going to be underneath the chart. So let's start off with the most popular. The 50-day moving average and the 200-day moving average. This is what you guys see, which is the red and blue line, which is going to be over on my daily chart. Again, the 50-day moving average and the 200-day moving average are simply enough just math equations. They are again going to be the mathematical formula of the average of the last 50 days and 200 days. But do you guys have to do this math? The answer is no, you guys don't have to do this math at all. All they are areas of resistance and areas of support. And it's all one big psychological game for us and investors. So for instance here, traders, what do you guys realize? The 50-day moving average is an area that we bounce off of, top resistance, and we fade. You guys could see, we hit it, we fall every single time. So let's just kind of go over into today's examples. You guys know MSTR is one of the plays that I'm watching very closely right now, currently up, $1,500 over on this play. Look at the 50-day moving average over on MSTR. Now, this is actually on a weekly chart, so this would be the 50 weekly moving average. So what we have right here is perfect dip, buy, and bounce play. perfect dip buy and bounce play, perfect dip buy and bounce play, perfect dip buy and bounce play. Remember, are we sitting here and doing algorithms ourselves? No, we don't need to do that. The chart's going to tell us the 50 weekly or moving at or daily, whatever we're looking at. But what I want you guys to understand right here is that this is just going to be a psychological area where everyone else in the world is realizing, oh, wow, this is where we usually get our dip buy and bounce play. Hence where it's moving on up, because what moves stocks? People. If everyone has the same indicators, everyone's going to be getting themselves involved in the same place. So I want you guys to do something right now. You guys can go over to tradingview.com. You guys can go over to finviz.com. I'm not like, I just brought up finviz.com. Let me click a random stock. What indicators automatically show up, right? The 50-day moving average, the 200-day moving average. There's the 20 here, but it's the 50 and 200 is what everyone uses, right? S&P 500, the 50, the 200. These are the defaults. So yes, while you might have your one or two indicators that maybe not as popular, these indicators have the most influence. If they have the most influence, that means I'm going to be able to make the most amount of money off of them. Traders, a lot of people always wonder, how do I have, for anyone who does not know, I got filled, and I know the majority of you guys already know this already, but I got filled over on my long-term investments this year on Monday, April 7th. Monday, April 7th is where I got filled on my long-term investments this year. How insane is that? How incredible is that, right? Now, the thing is, what was I doing? I have the 50-week moving average or 50-day moving average, a 200-day moving average, and the 13 EMA, and all I was looking at is on the monthly time frame. The monthly time frame shows us what here, traders? Let me make myself a little bit smaller. And what you guys can realize is every single time we bounce off this 50-month moving average, 50-month moving average, 50-month moving average, 50-month moving average, we came on down to Monday, April 7th. And I said to my retirement financial advisor, I emailed him and I said, hey, let's get ready to go, right? So I said, let's get ready to trade. Let's make sure that we're all set, ready to go. Let's make sure that we are all ready. So I will even take a quick little screenshot of this. Me and him were having a lot of conversations here. His name is Jeffrey, but let me kind of just get rid of that email there. And what Jeffrey and I were talking about, as you guys could see, Monday, April 7th. Please confirm anything you see or enter. Thank you. If you want to set up a call later, we can. I was telling him, hey, let's get ready to be able to do entries. This is going to be a great time. Here's what I'm thinking. And again, he went over, again, some great plays for retirement back on Monday, April 7th. So traders, there's a huge list here. I'm in on probably 25 different plays for my retirement. But traders, look what we have here. VST, Netflix, Meta, Uber, Apple. Let's just take a look at some of those plays right now that I was able to get filled, right? We go back over towards the daily chart right here. VST, Monday, April 7th. I got filled at $93. It's now up towards $192. Netflix, Monday, April 7th. I was able to get filled back on $831. It's got all the way up to $1,300. Meta, I was able to get filled on Monday, April 7th, back on down sub 500. It's now at $755. Uber, getting filled on Monday, April 7th, $60. It's now up to $96. Apple right here. Apple, Monday, April 7th, getting filled at $171. It's now at $228. So I have a ginormous list here, traders, and I can take a little screenshot of this whole entire list. At this time, you know, all these different plays that I've been in on, right? Palantir has been one of the best investments so far this year. Palantir, I got filled on Monday, April 7th. I'm sitting on Monday, April 7th right now, right around $68, $69. And now it's all the way on up. Now, why did I reach out to my financial advisor on that day? Because of the indicators that I'm using, the S&P 500, and realizing, wow, every single time we come down near this blue line for the last 15 years has been the best dip buy. And again, that's why I did it. That's simply enough why I did it. That's simply enough why I got filled at the areas I got filled at. No other reason. Because of that. So the 50 and the 200 is going to what you guys always want to be using on the daily chart, the weekly chart, and the monthly chart. The daily chart, the weekly chart, and the monthly chart is going to be the 50 SMA, simple moving average, and the 200 SMA, simple moving average. These are the ones that are going to be able to have the most influence, and that means they are going to be the ones that are going to be able to make you the most amount of money. Okay? So that makes sense there. And now, what else do we have here? We also have the exponential moving average. The exponential moving average is the green line that I have. It's called the 13 EMA. The 13 exponential moving average, or the 20, they're going to be very similar, is going to just allow you to be able to see when a stock is considered bullish or when a stock is going to be considered bearish. So, a great indicator to be able to use, one of my favorite indicators out there. Let's pick a random play. Someone from the chat room right now, throw out a random stock for us. Beautiful, Tesla. So, Tesla right here. Let's go back over towards the daily chart over on Tesla. Let's get rid of the 50-day to 200-day moving average. Let's get rid of those. Let's go over to indicators. Let's go over to 50-day, remove, 200-day, remove. Now, what this is going to show us, and something that you might learn, all right, something that, you will learn right now, is that the larger the time frame, the more accuracy you will have. So the largest you can go back out is monthly. Okay, that's the largest you can go. The closest you can go is a 1-minute chart. I do not use the 50-day or the 200-day or, again, the 13 EMA on a 1-minute chart. And I will show you guys exactly why right now at this moment, okay? Let's just go and take a look at the 13, and let's even bring up the other ones really quickly here, okay? Let's just do the 20 moving average right here, the 50-day moving average, and the 200-day moving average. So, if we are using these indicators right here, traders, and you're saying, oh, Deck, I'm using it on the 1-minute chart. I find success on the 1-minute chart. This is the issue. Look at the price right now. The price of the 50-day moving average over on Tesla is at the price of $338. You might say, Deck, if it comes back down to $338, I'm going to get ready for a dip buy. You told me it's a great area of support. What if I change this to the price to 3-minute time frame? Guys, that changes everything, right? It changes everything about the play. Let me show you right here, even in more detail here for a second, right? Because it'll be easy to see on, let's say, a smaller play, just a lot more simple. Let's go SMA right here, 50 SMA, okay? Deck, I'm looking at the 1-minute time frame. The hottest play of today right now is what? HCWB. Okay, beautiful. HCWB. The 50-day moving average on a 5-minute time frame is 465. Let's get ready for a dip buy. Oh no, Deck, it's not 465. I'm in the 1-minute chart. It's at 622. 622? No, you guys are way wrong. I'm in the 10-minute time frame. It's at, again, $4. What are you talking about? No, it's not. 2-minute time frame, it's at 585. As you guys can see, when you are close, zoomed in on a chart, you are getting so much information that the 50-day moving average will move sporadically. Now, what are we trying to understand? We're trying to understand the overall influence of the stock market, right? The overall psychology of the stock market. If we are, again, in 1, 2, 3, 4-minute time frames, guess what? We're too close. I only suggest using the daily chart, the 200-day moving average, or the 50-day moving average, the 200-day moving average, and the 13 EMA in the daily chart. Daily chart, weekly chart, monthly chart, larger time frames. When you're in on a minute chart, it changes constantly. So you will never be able to get the great support and resistance that you're looking for. The larger the time frame, the more support it will have, the more resistance it will have, the more influence it will have. Just like taking a look over on the S&P 500, while going back over the monthly chart, you can see how perfect these dip buys are. Just like, let's say, taking a look over on MSTR, over on the weekly chart, notice what we have here, perfect dip buy off this blue line, aka the weekly chart every single time here. Now, traders, let's get back to that 13 EMA. So now that we understand this a little bit more, let's go over to our indicators. Let's get rid of the 50-day moving average. Let's get rid of the 200-day moving average. The 13 EMA, we go back, let's say, into a monthly time frame. The 13 EMA is simply enough going to be what we call the flexible trend line. A trend line is going to essentially be when we have a stock that is moving itself on up. A trend line is going to be showing us the point of direction that the stock is going. It's slightly moving up. Anything that is on top of the trend line is going to be bullish, aka has better chance of spiking and ripping and running. Anything that is on the bottom of the trend line is going to be bearish. So essentially, as long as we stay above this red line, we are going to continue to move on up. But the moment we crack underneath it, guess what? We have more shorters and sellers. The 13 EMA is going to be the flexible trend line. So has anyone ever jumped into a play and you don't know when to sell? Deck, I jumped in on this play. I don't know when to get out of it. I don't know how long I can hold. Well, for instance, Tesla. If we are back in a monthly chart, a weekly chart, even a daily chart, the 13 EMA gives us a lot of guidance. The flexible trend line. Notice anytime that we are above the trend line, we are considered bullish. So from here to here, you guys can see we can hold this play. We can hold Tesla on the long side as long as it's above that green squiggly line, because there's better odds of it going up than down. What do you guys realize? Whenever we're underneath the 13 EMA, there's a lot more selling and bearishness. There's a lot more dropping. When you're above the 13 EMA, there's a lot more bullishness. There's a lot more spiking. So this gives us an idea of when should we be going after a play on the bullish side or bearish side. This gives us an idea of where we can be getting ourselves involved over on the stock. You know, on a daily chart right now, again, it's going to be a little bit quicker. You're not going to have as much long, let's say like a long time frame to be able to say, oh, let me hold it this entire month. MSTR on the daily chart shows us what? We are currently at this moment more bearish than bullish. Currently at this time, right, if we take a look over on MSTR, we are underneath the 13 EMA. So that means there's a better chance that we have selling at this moment than we have buying. If we again take a look over here, we have more bullishness over on MSTR, showing us that we have more buyers than we have sellers. So it just gives us a good idea of which way that we might want to be looking. So Deck, what are going to be some of the most popular indicators that we use on the daily chart, the weekly chart, and of course the monthly chart? That's going to be the 13 EMA, that's going to be the 200 SMA, and that's going to be the 50 SMA. These are the ones that we lie down on our charts. Now, the ones that are going to be over and under our charts are going to be the RSI and going to be the MACD. Those are going to be the two very popular indicators outside of those. So the RSI stands for Relative Strength Index. And simply enough, this is how the RSI works. The RSI is going to be anything that is over a 70 is considered overbought. Anything that's under a 30 is considered oversold. Anything between 30 and 70 is going to just be normal price movement. So let me ask you guys a question. If you saw or you heard that a stock is oversold, let's say Apple drops down to a low, a new record low, what would most people do? Most people would say, oh, wow, Apple is oversold. There's been too many people selling it. I could be able to buy the stock for value. What if all of a sudden a stock is overbought? The stock goes higher than what people expected. The stock is overvalued. Well, then guess what? It's going to sell on off. Undervalued, or it's oversold, let me buy it. Overvalued, guess what? People are going to sell it. The RSI is going to allow us to be able to see that. The RSI is going to make it very simple for us to be able to trade. So for instance, let's go ahead and let's add the RSI. Let's get rid of everything else other than the RSI, okay? Let's go right here, scroll on down, RSI. It's always in the 14 setting, and let's just go to add, okay? 14 setting, let's go to add. Let's go over and type in something very simple, such as Tesla, okay? Very simple, Tesla, taking a look over on this play. Here's the RSI. And as you guys can simply see, let me again grab this and we could draw this out to make it even easier for us to all understand what. We know that we are near a 30 right here. Here's a 30. And we also know that here is going to be right next to around a 70, right next to the 69 at this moment. Let me try to do my best to kind of just go right across the board here. Right across the board, 70. Let me do my best to go right across the bottom right here to go near a 30. Now, what have I taught you? Anything that is a 30 or lower is considered oversold. Anything that is in 70 or higher is considered overbought. Now, can we start having predictability in the stock market? You guys tell me, right? What do we have? Every single time when we take a look at the RSI, we became overbought or above a 70. What did we start realizing? Stock was again at a 70 right here. We do get pullbacks, right? Stock is above a 70 right here. We do get a massive pullback. Stock again has above a 70 right here. We have a pullback, right? That's what we see. Do you guys realize that every single time that we are again considered oversold, what do we have? Here's oversold going up. The stock again goes on a nice rally, right? You guys can see right here, stock is near oversold. Guess what happens? Stock goes on a very nice rally. So it all comes on down to understanding, hey, should I buy this stock right now? Well, am I overbought? If I'm overbought, it's probably not a great time to buy it because look what's happening in the future, right? It's the same exact thing. Let's go ahead and pick, any play. Like you could pick a bajillion different plays out there in the world at this moment. If that's NVIDIA, or if that's Palantir, or if that's Apple, let's just do Palantir. It's a very active play. So the more active a stock is, like the easier it is to be able to read plays. Take a look right here. What do you guys realize? Hey, Deck, here's an 80 on the RSI. Like, we're getting high. What happened when Palantir hit an 80? When Palantir hit an 80 on the RSI, look at this pullback that we're starting to have right now. Well, Deck, what happened when, again, Palantir had a near a 30 on the RSI? Look at the run that we were able to have. Look at the 30 right here. 30, look how high we were able to spike on up. But then also, guess what happened? Well, we got a massive drop right here. Why did we get a massive drop? Because we were considered overbought, right? So it's really neat to be able to see, okay, hey, if I see stocks that are above an 80 on the RSI, I could be able to go ahead and look for potential shorts 100%, right? Now, it's not going to be 100% crystal clear accurate every single time, but it is going to at least give you an idea about these plays. So if I wanted to, I can go over to finviz.com real quick, go over to Finviz, go ahead and click screener right here. And once I click screener, I could be able to go over to all, right? Let's go over to all category and let's actually just search. I believe there is the RSI. Let's just go to stocks that are extremely overbought. Stocks that are overbought right here. There's 81 stocks. You guys can look through these. These could be potential shorts for you. Well, Deck, I don't want to play little penny stocks. I want to play stocks that are overbought that maybe are a little bit larger. Okay, so go, hey, Deck, stocks that are over $40 that are overbought. Okay, there's 15 plays. All of these plays are overbought stocks with an 80 or higher that have great opportunity to be able to come down in the future. Now, this does not mean just blindly go ahead and invest into overbought stocks on the short side. That could be a serious, trouble. But I'm saying stocks that are truly overbought after doing your due diligence. Same exact thing with oversold plays. Good, credible companies, not penny stocks. Penny stocks, again, those plays, if you just buy a whole bunch of oversold penny stocks, those are plays that might never come back on up. Somewhere down the line, people always think, oh, the stock has to come back up at some point. No, it doesn't. It can go bankrupt. And a lot of penny stocks do go bankrupt. A lot of stocks that are $5 and under don't ever come back on up because they're just not good companies. And that happens. So you have to just be understanding that is something that you guys will see and will notice. Now, Deck, you talked about, again, let's say Palantir, the RSI. What's the other indicator that we like? Well, we also like to use the MACD. The MACD is another indicator that could be able to help you make a lot of money. And this is just going to be, let's add the MACD right here. Let's get rid of the RSI because we really don't need that right now at this moment. And the MACD here, traders, is just going to be a constant tango dance. That's all it is. It's a tango. It's a tango between the buyers and the shorters. Now, who's winning? That's the question. Who's in lead? Now, the buyers are going to be anywhere in orange or gold here. You could pick whatever colors you want, okay? So what we have right now is the buyers are going to be in orange. The shorters are going to be in blue. Who's leading this tango? Well, whenever the buyers are above, right? The buyers are above the shorters, you are going to see price action move up. Whenever the shorters, right, are above the buyers, you will see price action move down. Whenever the buyers are above, or the orange line is above the blue line, stock tends to move on up. When the blue line right here is in control, like we're seeing in Palantir, guess what? Price action is moving on down. So traders, everything I'm throwing out here is going to be, again, teaching you about different ways to predict the market for indicators from psychology. You don't have to use every single one. You don't have to use the 50-day or the 200 or the 13 EMA, and then on top of that, the RSI, and on top of that, the MACD. Find what works best for you, and you'll be all set, ready to go. Now, there might be something that you might be saying to yourself, Deck, you didn't go over anything on the 1 minute, 2 minute, 3 minute chart. I see, again, you do have things on these charts like, what do you like to use over on this minute chart? Now, traders, let's go back in history real quick. Why did I tell you that I absolutely hate using moving averages over on right here? Why do I hate using moving averages on the 1 minute, 2 minute, 3 minute time frame? Because it changes in price constantly. It's at 107, then it goes on down towards, let's just change the time frame a little bit, then it goes down to 98, and if we pick a little bit of a bigger play, like STSS, this would work a lot better. 1162 on the 5 minute chart, 1 minute chart, it's now again 1175. Now again we go to a different minute chart. You guys, now it's at 1130. So you can see it changes way too much. So I don't use the 50-day. The 200-day, the 13 EMA. I don't use the MACD or the RSI over on the minute chart. The only one that I use on the minute chart here, traders, is going to be the VWAP. The VWAP is the volume weighted average price. Now, VWAP is going to be the most popular indicator on the minute chart. Now, once again, Why am I using the most popular indicator? Because it has the most influence. Since it has the most influence, that's the one that can be able to make us the most amount of money. Now, traders, what do you guys realize about this? In the 3-minute chart, it's sitting at the price of $12.25, this black line. Guess what? In the 2-minute chart, it's still at the same exact price. In the 1-minute chart, it's still at the same exact price. In the 5-minute chart, it's still at the same exact price. And that's what's so great about it. 1, 2, 3, 4, 5-minute chart, it might be off by 1 penny. Now, what is the VWAP? Well, guys, what's the VWAP? Well, what's the 50-day moving average? What's the 200-day moving average? What's the 13 EMA? Those are all areas of support and resistance, areas that we can bounce off of and areas that we can reverse off of. Hello? Ding, ding, ding. You just figured out the answer. We hit the black line, we reverse. You come back up, you hit the black line, you reverse. You come back up, you break it for a second, but then you reverse. You come back up, you break it, you reverse. Now, again, we're finally breaking out of it. So the thing is, you guys can see it usually holds up as a very strong resistance, or on top of that, a very strong support line. It's the most popular indicator on the minute chart. Since it's the most popular indicator, bounce play, bounce play, bounce play, it has the most influence, aka bounce play, possible bounce play coming on up. So this is absolutely great to be able to understand about where, again, dip buys and bounce plays will be, because that's where you guys can make the most amount of money. That's where you guys can be able to make the most amount of cash, and that's where you guys can be able to make the most amount of profit when you guys are using these indicators here. So let's get back over towards our PowerPoint here, and let's talk about these indicators and where we're at and what we've been using, and start kind of getting a quick little review on them. So what we have here, guys, RSI, and then lastly, we just went over the VWAP. The VWAP is all about, again, the minute chart, using it as another form of support and resistance. So why are we using them? They are the most popular. Using the most popular means they are going to have the most amount of influence. Now, yes, traders, there are going to be a bajillion different indicators out there. Experiment, try them on out. See what works for you, see which is going to be the best plays and which ones are going to be able to make you the most amount of money. But it's time to move on to a new topic. As you guys know, I'm not here to waste your time. I'm here to make you guys the best traders you can become. So next topic we are moving into is traders. We look at these charts right here. These charts right here, I see a whole bunch of green. I see a whole bunch of red. I see a whole bunch of, these stocks moving on up or down. But how do I read it? These are candlesticks. Guys, I remember one of the most confusing things that took me so long to be able to learn, and I don't know why it took me so long to be able to learn, was I would look at Tesla, and I would look at this chart. This chart was a daily chart. This chart was a 5-minute chart. How are these two charts the same? I would get so confused on that when I first started trading, and maybe you guys are as well, but I'd be like, all right, Tesla has a big spike and a big time dump, and then it's this and this and this, and then this one just has a spike. Like how are they different? The way that this works here, traders, is when we take a look at these time frames, the 5-minute chart right here is, of course, each candle is representing 5 minutes. So basically what we have here is this little tiny green candle. If we had a magnifying glass and we zoomed in on this one little tiny green candle, that's what we're seeing right here, right? A 1-minute chart. 1-minute chart shows us 1 minute. Each candle represents 1 minute. So right now it's 10:31 in the morning. Each minute is represented in a candle if the stock went up, green, or if the stock went down, red. And this, again, the whole entirety of this right here is what this one candle is. So the daily chart shows us not only today, but yesterday, last week, again, last few months, right? If I want to go over into a weekly chart, each candle represents the overall week. If I want to go over into a monthly chart. So the best way to be able to have this is be able to have a minute chart, or again, be able to see today and then be able to see the overall. But let's go ahead and let's talk about how candles work, how we can be able to read candles, how we can be able to figure them on out. So what we have here, guys, are what are candlesticks. Candlestick charts are used by traders to determine possible price movement based on past patterns. Candlesticks are useful when trading as they show 4 price points: the open, the close, the high, or the low, throughout the period of time the trader specifies. Many algorithms are based on the same price information shown in candlestick charts. So very simple, very easy. A green candle represents the stock going up. A red candle represents the stock that is going on down. Now, you guys might see these little wicks, right? These wicks above it or wicks underneath it. These are what we call the upper shadow. So basically, we have the upper shadow, the lower shadow, and the real body of the candle. When we take a look at a candle, we can get a lot of information. If it's a green candle, where the start of the real body is where the candle opened. So let's say this is a daily chart. This stock opened up at the price of $10. The stock spiked all the way up towards the price of $15, and then it closed at the price of $14. It would be a green candle showing that the stock opened at 10, spiked up to 15, that's the wick, closed back on down towards 14. So the wicks are showing the highs and the low points of that specific time frame, and the open and close is where, again, the real body, the real movement of was that play. So again, if this is a 1 minute time frame, this would represent where the stock was, where the low was, where the high was for that 1 minute. If it's a daily time frame, where the low was, where the high was, where the close at for that day. Stock opened up at $10. Let's say it crashed on down to the price of $9. Then it spiked on up to $15 and then closed at $14. Right? The stock would still be a green candle with lower and higher wicks. Same exact thing when you guys take a look at the red side. Red side means we opened at $10, maybe spiked up towards $12, crashed on down to, let's say, $5, and closed the day at $6. The stock opened on up, went on an initial spike, crashed on down, hit a low, but again, bounced back up slightly at the close. Had an upper wick, a lower wick, and a red body showing that it was red during that specific time frame. So again, a candle gives us a lot of information about what these plays are doing. Now, as we talked about slightly before, we wanted to understand what's the right time frame. I see, again, a daily chart, a 1 minute chart, a 5 minute chart, a 10 minute chart. How do I know which is the right time frame to be able to get myself involved in? Simple, easy answer. You guys ready for it? Simple, easy answer. Have 2 charts open at all times, okay? One time frame is going to be your large time frame. That means you're looking at the daily chart. That means you're looking at the weekly chart. That means you're looking over on the monthly chart. One time frame is specifically set to, again, large. The other time frame is going to be specifically set to small. So what I like to do is I like to see this. I like to, let's say, go back over towards Tesla right now, right? Tesla, a weekly chart here. Let me go back on over to like even a monthly chart. I want to see again where Tesla has been at, right? I like getting understanding of plays. Like I know that Tesla's going to have super strong resistance all the way up next to 400. I know it has super strong support all the way back down to 200. Multiple bounces, multiple resistance up near 400. Right now, guys, we're at 340 now. So again, I'm getting some great overall large detail about Tesla, but now I can zoom in on this play now. And I can say, all right, hey, Tesla has room to run up towards around that 400 area. You guys can see we started off with a drop out off, came back up towards 342. Looks like we have 342. But I mean, at the start of the day, it was very like active. You see the big, spike. We spiked up to 340, came back on down. What you need to do is you can never just be in a 1 minute time frame. If you're just in a 1 minute time frame, it's like trying to read a text message this close away from your face. You cannot read text messages this close away to your face. Because guess what? It's just too close. You can't get a good understanding about the play. But at the same line, I can't put my phone here and I can't go, guys. I can't go way back here and be like, what does that say? What is my phone? It's too far away now. So the thing is, traders, you cannot be so far away on plays that you can't get a grasp. So for me as a day trader, I love having a daily chart open and then like a 1 minute chart open, 2 minute chart open so I could be able to see. Deck, what if I use like a 10 minute chart or a 15 minute chart? Well, for me as a day trader, each chart right here, the candle, I want to be able to have specific understanding of where that play is moving. Traders, if I'm a day trading and I'm focused on trading Tesla today, I don't get a lot of understanding of what's happening on Tesla from this far away. I want to see what's happening on Tesla closer. Again, I'm magnifying in on this play. Same exact thing. Let's say I'm looking over on, let's go with a penny stock here today, HCWB. HCWB here, guys. How would you guys break down this play a little bit? For me, HWB, I always start with the easy basics. Hey, we know 730 is going to be some top resistance. Notice we just got a nice little bounce play off the VWAP. Absolutely great. I can also see we had a lot of bouncing right off around that 575-ish mark. So again, when me breaking down this play, this is how I do it instantly. I always look at the high, put a resistance line right at the high. Guess what, guys? I have top resistance at 575, top resistance at 575, top resistance at 575. We broke 575. There's a nice little dip buy right there. We also got a nice little dip buy off the VWAP, but if it comes back on down to 575, that should be our next dip buy opportunity to be able to make money and be able to see the stock try to move itself back on up. Great. I just figured out a great game plan and great dip buy. Guess what? If I was in let's say a 5 minute time frame or even a 10 minute time frame, guess what, traders? 10 minute time frame, could I do all that? That's a lot harder to see. I might not get the same answers. I like having detail. And then I like seeing HCWB on where it's been in the past to understand the chart a little bit more. So it's about finding that perfect balance from the overall understanding to a more detailed understanding. And that's why, again, time frames are so important when you guys are reading your candlesticks and understanding how candlesticks work. So daily charts going to give you the overall understanding. And then, of course, minute charts are going to make sure that you guys are all set, ready to go. All right. So what we have here, traders, is we are looking that a lot of traders are always going to be doing different patterns, different setups on charts. Okay, you guys know I like looking for support, resistance, breaks of indicators, things that I've taught you guys already. But at the same time, people just specifically focus over on different candlestick patterns, which is really neat and very cool because it gives us an understanding of maybe how price movement's moving, right? How price movement is moving. What we have here, guys, is a bullish engulfing pattern. A bullish engulfing pattern. We will see one ginormous green candle swallow up the previous red candle. So if you are on a daily chart, and I will tell you right now, every single one of these patterns, just like we talked about with the indicators, will be stronger on a larger time frame. Daily chart, weekly chart, monthly chart. Bullish engulfing. Let's say we have the S&P 500. The S&P 500 has had a little bit tear of some red candles. And we see one big green candle swallow up the previous month. That's a great indication that buyers are strong, that buyers are moving in. Let's just, again, I haven't even looked yet. Let's go back over to the S&P 500. Let's go back over to like a weekly chart here. And can we find like any, or even a monthly chart? Can we find any large like bullish engulfing patterns where it's saying, hey, you know what? Like this could be a great reversal. This could be a great like trend in some sort of way. Well, for it to be frank with you, I do see one. One would be like a bearish engulfing pattern right here. Now, where do I see that? Let me stop clicking the wrong button here. Let me grab an arrow. Bearish engulfing. Take a look at this. Do you guys realize we have this beautiful uptrend, beautiful uptrend, beautiful uptrend, beautiful uptrend? Then again, we have this red candle swallowing up the entire previous month green candle. That's now showing we do have a change in direction, isn't it? We are seeing, again, a change over on this play. We are swallowing the entire previous month. That's not a good sign. That's showing that, again, weakness is now here. That's now showing, again, we are getting that nice little fade. We are showing that we're getting a nice little drop here. Now, team, that's, again, a bullish and bearish engulfing candle. I want to skip to the good stuff. What's the good stuff? The good stuff is that I want to tell you guys is, what is the easiest way to predict stocks? What is the easiest way using candles to predict plays? And it will be the upper and lower shadows. Remember those wicks that I showed you guys before? Well, what a wick is showing that a stock spiked up to a specific area and it could not hold that area. So how a wick would form, if let's say we're looking at a specific stock here, is a stock would open on up, right? Stock would go on a very big spike and then the stock would come back on down. And let's say it would close right here. This could be a 1 minute time frame, a 5 minute time frame. But regardless, how would that stock look? That stock would look like this. We'd have a candle right here. Like this would be the real body. And then this would be the wick. Now what a wick shows that the stock was able to spike and rip and run. But guess what here, team? It gave all of its gains on back. Now when you give back all of your gains on a wick, it shows the stock was here. Everyone retreated and usually heads in the opposite direction. Now, before we go any further, yes, the answer is true on the same exact way. That if all of a sudden a stock is fading and falling and dropping, let's say a stock is getting very ugly, opens up here, stock falls apart down here, spikes its way back on up right here, and then closes, let's say that 5 minute or that daily chart, how would the candle look? The candle would look like this. We have our real body right here. And then, yes, it shows us that the stock had this massive fall that, guess what, we were able to recover from. So the stock crashed at the start, but then guess what? We did recover it. And now that's showing that momentum is on the upside. One of the ways that I make money constantly in the stock market is understanding where wicks are at. Do you guys realize that a lower wick is always at the price before the S&P 500 moves back on up? Lower wick, S&P 500 moves on up. Upper wick, S&P 500 moves on down. Lower wick, S&P 500 moves on up, right? Even look at this one. Lower wick, S&P 500 moves on up. Traders, let's take a look at some of these charts here, even on the 1 to 2 minute time frame, okay? Notice what you have over on the S&P 500 just right here, okay? Every time you have one of these upper wicks, guess what happens? The S&P 500 starts falling. This is how I short plays and I make money shorting stocks. Let's just take a look over on, let's say, what's the most active plays of today, right? Let's go back over to a 2-minute time frame so we can see the entire day. Do you guys realize that every single time OSRH spiked on up and formed a wick, the next 1, 2, 3 candles were red? Wick, red, wick, red. How great is that? How cool is that? Go over to HCWB. Nah, not really any wicks right there. We have a little lower wick, right? Little lower wick right here. Shows that the stock spiked and was able to recover. Nice spike back on up, right? THAR. THAR right now here, traders. This is not any wick at this time. Maybe nope. But again, you guys see massive reversal at that point. That play, again, no wick, just kind of a massive reversal. Here's again, wick at the top, wick at the top. Stock again starts fading and falling. You guys can get a great understanding, the great gist about these plays. And again, where these wicks are at. OPAD goes on a nice spike right here, forms that wick, looks at that big reversal right there. Right? You could see CAPS. Look at the amount of upper shadow wicks. Stock starts fading and falling back on down. Right? You can see this. The upper wicks shows that the stock spiked, couldn't hold up its gains. You guys know this amazing, opportunity right here. What do I have on these plays? Right? What am I doing over on these stocks here? We see a lot of times stocks move themselves on up, right? We have the upper wick, and then the stock moves itself back on down. What's the example that I always give? The example would be if you were a mountain climber. Deck, I'm climbing up Mount Everest. I'm climbing up it. I finally got to the top. What do you do at the top? At the very tippity top, you put a flag at the top, letting everyone know that you've done it. And now you head down the opposite side. Now you head on down. Now you're going home. Hey, I climbed the mountain. That was fun. Time for me to go home. So again, when you're taking a look at a lot of these plays here, traders, right? Let's see if INHD forms a wick right here, traders. INHD trying to form this wick. Let's see if, again, the next candle is going to be red. Right? This is a live example right here. Let's just see. INHD, type it on in. INHD, we might want to go back into like a 1-minute time frame. Okay, 1-minute time frame, 5-minute time frame, we have a wick right here. Let's see if this wick, where we just spiked on up to 213, would lead towards the next candle being red. So what would that mean? The next candle should go back down towards like 197, 196, 195. Uh-oh. Traders, are we having a red candle right here? Uh-oh. Look at this. Uh-oh. Look at it drop. Uh-oh. So you guys can get what I'm saying, right? You guys can gauge like what's happening here, where again, this play might play out a little differently. We'll see what happens on it. But at the same time, I want you guys to gauge that when we have wicks right here, they're usually going to be the greatest opportunity to short, or at least to know, hey, ladies and gentlemen, it might be time to sell. So it's not like I'm just making this stuff on up. You guys can literally see live examples right now of we just formed an upper wick. Now again, it's starting to fade and fall. It's like climbing a mountain. When we get to the top of the mountain, we place our flag and now we head back down the opposite side. So everything I'm teaching, you can apply to literally what's going on in the stock market today. That's so cool. That's so amazing, right? That's so awesome. So these are how I use these candles to be able to really get a great gauge about it, right? And the candles are going to take practice, just like everything I went over today, guys. Everything that I've talked about so far today, it's going to take practice. It's going to take a little bit of time. All right? So those are going to be candles on how we want to be able to use them. Our next topic of discussion here. And our next topic of discussion is going to be entries. Now, I know a lot of people don't think this, but it's very simple to find the number one top gainer of the day. We have all these scanners, we have all this equipment, we have Fox Runner, we have trade ideas, we have all those things that we already talked about what you guys need to be able to start off each morning. But the thing that's more difficult is actually figuring out a price point on where to enter a stock. When you figure out the price point of where to enter, that is going to lead towards you actually being successful. I cannot tell you how many times I have bought the number one top gainer of the day and somehow lost. A stock goes from $5 at $25, but maybe I got filled when the stock went from $5 to $10, got filled, it fell back down to $8, I get out of the play, next thing you know, it's all the way up to $20. And I know a lot of traders can relate to this, somehow getting in at the wrong time, and it seems like every time we do get in, the stock reverses on us. So how can we avoid that? How can we have great entries? Now, an entry of a stock, very simple, is just going to be putting ourselves in on that play. We are taking our hard-earned money, buying shares of a stock, and now we are going to have partial ownership. Now, as we have partial ownership, depending on how that stock's performance is, we could either make money or we could lose money. Now, one of the most important things there are in stock trading on how to be able to figure out where a stock is going to be moving next. It is not about what is the best play of the day. As I said, that's very simple and easy to be able to discover. What you need to figure out is where are reversals going to happen. So everyone write that down. The secret to success is being able to figure out where a stock is going to reverse. If you can figure out reversals and you can become a master of where our stock's going to reverse, that is where you are going to have the most amount of success. Because guess what? I can figure out stock ABC is going on a big spike, but I need to figure out the greatest entry. Now, these entries are going to be support and resistance. I know we talked about this on our last lesson, going over what is support. Well, support is simply enough just an area where we are going to see bouncing. It's going to be a price point, which is almost like a platform. We're also going to see resistance. Resistance is going to be an area of rejection. It's almost like a roof. We can't get through it. It's through a ceiling that we cannot break above those certain price points. So let's start off with support. We are going to buy at the strongest support line we see after a spike. This could be past chart history pattern, natural support, or detailed support. We are buying at support because this is where we can increase our reward and minimize our risk. So, for instance, traders, if we are taking a look over on this chart and we are realizing that every single time it comes on down to this bottom blue line, we get a bounce play off of it, we could start putting together a pattern. Not only am I seeing that we are going to get a dip buy and bounce play off this bottom blue support line, but we also know that other traders throughout the world are also going to notice this pattern. So they're going to be placing entries. Remember when I told you that the stock market moves because people are buying and selling? It's companies buying and selling. It's hedge funds buying and selling. It's brokerages buying and selling. It's retail traders buying and selling. When we establish a support and resistance line, we are now going to be able to understand where should we buy at to be able to have the most amount of consistency. So we could take a look right here. And we can realize not only is support just a flat platform moving sideways from past chart history pattern, but we can also see that support is also going to be horizontal at times. We are going to be able to see trend lines. Now, the big issue with a lot of traders is they realize that we have these uptrends. But guess what they fall into? They fall into their emotions. They fall into FOMO, the fear of missing out. They constantly buy at wrong times. This is what I want to get through to your head right here and right now. The majority of traders will not buy a stock near support. They will buy a stock after it has already bounced on up, and now they have the visual confidence the stock is going up, so now it's a good time to buy it. That is absolutely incorrect in every single way. You do not want to wait for a stock to move itself on up. You do not want to wait for a stock to spike and rip and run. You do not want to wait for a stock to be able to spike up 100% before you get yourself involved in on that play. That is not going to be the time to be successful. As you guys can see right here, every single time the stock has spiked, if you missed out on the bounce play, you most likely got caught up in a drop. This is where you have to go against your human nature. Your human nature is do not buy a stock that is falling and fading. I completely understand that. But the falling and fading is when a stock becomes oversold, just like when we talked about on the RSI. A falling and fading stock is when we have a dip buy and a bargain price. A falling and fading stock is when we have the best opportunity to make money. If we buy stocks after it already has a 70 on the RSI, because this is when we're the most confident because we see that it has proven results, it usually means we are buying and someone else is selling their shares to us, which means we're paying out their profits. You have to reverse your mindset in stock trading. I am not telling you to just buy every single stock that's dead and it'll come back up at some point. That is not what I'm saying. But what I'm saying is if we see a good, strong, healthy company or a stock that's very hot on the day with a good press release, with a lot of good volume and volatility, and we have an uptrend, we can look for dip buys rather than being the person that feels like we have to buy at the highest point, hoping that it goes higher. So, we always want to be looking at our support and resistance lines. Now, these are the best entries that you could possibly ever have. Support is where you dip buy, support is where you enter, resistance is where you sell, or resistance is where you short. So if I wanted to get involved over on stock XYZ right here, we can realize where would be the best area to be able to dip buy this play. Get next to the blue line. Refuse to buy at highs. I will tell you, and I will even say for myself, I would always be a trader when I first started that wanted to look for the breakout, wanted to look for that big squeeze and that big spike. The majority of traders who do that will consistently lose. Buy at the blue line, short at the red line, take profits at the red line, cover your short at the blue line. It's a game of just back and forth, and once you establish the pattern, you are going to have success in this game. So how do we know when to actually buy at the break of resistance? Because that's when we get the next leg on up. I will always say, look for the entries at support, and from there, you'll eventually get the break of resistance. But if you keep buying at resistance, you're going to have some trouble. Usually what you could see is it's going to be the third to fourth touch is when we have the break of resistance. The third or fourth touch is when enough buyers come back on in where we get that big time breakout run. So what we can see here is here's a very easy textbook example. The way that I always like to think about this is our first touch of resistance is going to be us establishing resistance. So when a stock XYZ runs on up to the price of $5, we hit $5, we establish $5. We fall back on down, we bounce off support, we run back on up. We enforce $5. Then the third time we come up and around, we break $5. It's not always true. It's not always this is the third or fourth time we're going to break out, but it's a nice little rule of thumb to help you just get a mindset of when we can see a breakout. Establish resistance, enforce resistance, break resistance. Sometimes it might be the third touch, sometimes it might be the fifth touch. But if you consistently keep hitting those highs, there is a great chance that you are going to be able to break out. Little side note, one of the greatest ways to know that a breakout's going to be coming is every single time that you do have a pullback, you have a higher low, showing that even when you are getting rejected, you're still taking a few steps forward. So a higher low is something that we are going to talk about, but it's something that you guys might just want to be thinking about right now to know when a stock is going to get a nice breakout. Now, what else can you guys see out of the image right here? You can also see that our old resistance where we had trouble getting above before is now turning into support. This is an area where we are going to get dip buys and bounce plays towards. So support and resistance is going to be consistently changing. Old resistance will hold up as support depending on where the price point is at. And this is how we can be able to be predictable in the stock market. So what do you guys realize over on our charts as a little bit of an example right here? We might have the price of $5. $5, we hit as resistance, we fall back on down. We hit as resistance, we fall back on down. We break resistance, guess what? We run up towards our new resistance line. Let's say 750. 750's new resistance, guess what? $5 is now a great dip buy. Runs up to 750, $5 is now a great dip buy. Runs up to 750, $5 great dip buy. Guess what, guys? We now break 750. 750, guys, eventually we fall back down to 750. Guess what? This is our new dip buy. So another great example of just understanding how support and resistance is going to work hand in hand to always give us our
These are the 5 reasons to get
Just like here, we can see $2. $2 holds on up, we fall back on down, nice bounce off that 50-day moving average. $2 holds on up, start building higher lows, stock starts getting tighter, here's the breakout. First touch, we establish $2 resistance. Second touch, we enforce $2 resistance. Third touch, we break and squeeze $2 resistance. The 1, 2, 3 punch right here. Same exact thing when we take a look over on this example. Top resistance, top resistance, top resistance, top resistance. Eventually, we break out of it. But you could see, this one didn't take 3 times. This one took about 4 to 5 times before it broke resistance. But the number one issue that a lot of new traders make is they're always buying here, looking for the breakout, but it cracks. Buying here, looking for the breakout, and it cracks. Very simple, very straightforward here, team. Where do you have a better chance of success? If you, again, buy here, you lost one time. You buy here, looking for the breakout, but it doesn't happen. You lose again. You buy here, you buy here. You lose again, you lose again. And then finally, let's say you buy here and you finally win. It took you 4 losses before you had 1 win. Why would we do that? When guess what? We could buy here, we win. We buy here, we win. We buy here, we win. Guess what, guys? We could even buy somewhere down here, we win. we can win so many more times just by buying at lower areas, buying where we have our dip buys. So do not get emotional. We want to make sure that we understand, of course, these charts and understand where we have the greatest odds. We have reward, not risk. Market conditions are everything, traders. Now, every single day, the market's going to give us different conditions. We are going to have hot days. We're going to have slow days. We're going to have days that we can make a lot of money. There's going to be days that we're not going to have as much volume. Like, for instance, right now in August, it's a little bit slower at times, isn't it? During August, we're not seeing as many big time breakouts. In August, we might have traders doing what? Enjoying the weather, hanging out with their families. People on Wall Street are in their Hamptons houses, hanging out at the beach, going on vacations. The thing is, we know that the hottest time of the year is going to be October, November, December. We know of very hot times, January, February, March. We need to know the hot times of the year when we can be putting big money in the market, expecting big returns, and maybe when we want to slow things on down. A great example would be skiing. If you are a skier or a snowboarder, you know everything about conditions. If you have great conditions or it's nice fluffy snow, you're going to have a great day. But what if you want to go skiing and snowboarding and it's 80 degrees out, there's no snow on the mountain, the chairlifts aren't open, but you really want to go skiing? Hey, have fun, enjoy it. You're going to have to hike up a mountain. You're going to be riding on grass and dirt. You're going to fall, hit a rock, right? It's like, you have no control. It's awful conditions. There's no snow. So sometimes we are going to have days that are not going to be as hot as other days. Sometimes we're going to have that absolutely perfect day where it seems like everything is breaking out. Please understand that the market conditions will change every day, and you want to be able to gauge that by seeing in pre-market how much is stocks moving. Are stocks up 100, 200, 300%? If they are, it's a very hot day already. If they are, we can expect to go ahead and attack plays with big volume and big action. But if we wake up and there's only a top gainer that's up 10%, 5%, nothing's moving, no hot news, well, we may want to slow down, take a little bit of a step back, and understand these are the conditions that we have on this day. Do not fight it, because guess what? You're one individual. You're one fish in a giant ocean. Your, again, $2,000 trade jumping in on a play isn't going to make anything rip and run. You have to go with the current of the ocean. Don't go against it. So, when can you look for these breaks of breakouts, right? We already talked about these breakouts. We talk about watching for these huge spikes and these rips and these runs. When can you have the best chance of buying at the break of resistance for that next leg? Well, hotter market conditions, weeks with multiple spikes, big news, big volume, higher lows, right? That's what we want to be able to see. We want to see higher lows. We want to wait for the third to fourth touch. We want to see a day that maybe stocks are up 200, 300, 400%. Everyone on social media is talking about that. So that's very important that we consistently buy at lows, of course, waiting for great opportunities to present itself. When do I buy at support? Always. You can always look for a dip buy at support. There's never an issue. There's never anything wrong with looking for a dip buy down low. And guess what? If it doesn't bounce, you are going to have a stop loss underneath your support line where you have such minimal risk. It's always worth at least trying to test it on out, right? So are there any other times to be able to enter plays? Well, Dick, we're talking about support and resistance so much. When is going to be the best times to be able to enter plays? And this is what we talk about learning the alphabet. We have A, B, C, and D. What are going to be the best times to be able to learn plays? This is where I do got to get a little creative right here, because I do want to be able to talk about right now, how can we be able to trade stocks? How can we be able to get in on the greatest entries? Well, you guys have already learned that we definitely want to be getting involved at these great price points. But I always look at plays and I always think about the alphabet. I think of A, B, C, and D. Now, what is that referring to? Let's say, again, we have a stock that does this. We have a stock that moves itself on up, hits, let's say, strong $5 resistance, falls back on down, and now is starting to move itself back on up. The alphabet in my eyes is going to be what? A. A is going to be establishing strong resistance. A is going to be the high of the day. A is going to be the price point that we want to be able to break through eventually. B is going to be the reversal. B is going to be fading and falling and dropping back on down. C is going to be right when the stock starts finding a little bit of that higher low. So C is going to be, hey, we just found support. We're now building that higher low. And then D is going to be when we get back up to resistance and we finally start getting a nice breakout. So let me ask you guys a question. When would we want to buy plays? When do we want to look to be able to get involved over on these stocks? The correct answers that we are looking for is if we are looking to go long, aka buy stocks on the upside, the best entry is always C, with the potential entry of D. Remember, we do not want to get caught up in the hype of buying a stock that is spiking and moving on up just to buy at the tippity top. We want A to establish where the high of the day is. We want A to establish where resistance is at, but we want to avoid buying at A. The only way that we would ever buy at A is if we're shorting, aka betting that the stock is going to fade and fall. Remember, watching to see if maybe the stock is going to form one big upper shadow right there, and maybe we can short it back on down. Then A would be fantastic. B is when we are going to look to find support. So as we get down to B, if we are shorting this play, this is where we probably want to cover our position because now we're coming on down to a support line. Now, Deck, when would we want to start actually going long? Well, going long would be once we start seeing a little bit of higher lows off support. Now, there will be many times, as I already stated, that we do get rejected off D. The best price to be able to get involved over on plays is going to be somewhere between C and, of course, as you're moving up towards around that D area to get the best overall cost basis or the best overall average. If we can have a great average before we actually get to D, that's going to help us save a lot of money. Let's say this, guys. Let's imagine this here for a second. Let's imagine that we are looking for a great entry. We believe that we are going to get a breakout coming on up. We believe the big time breakout's going to come on up. This is the third or fourth touch in the near future. Okay? What could I do? I could enter right next to C. I see that higher lows are starting to form. I see that the stock is moving on up. And let's say right now at this moment, I have 1,000 shares over on this play. I could enter at C. Once we get up to D, I again lock in 500 shares. Guess what? I just made profit. I am guaranteeing myself to make profit. I'm guaranteeing myself to be able to lock in some sort of gains. And you know what? If it does break out, well, then I got 500 shares that I can be able to continue to hold. But let's say the stock turns and starts falling. Well, then, ladies and gentlemen, guess what? I could get out here. I could get out here. And again, no matter what, I'm still making money because I already locked in that $500 profit. So traders, let's get to the next step of this. The next step of entries is going to be averaging. Averaging in, averaging out, understanding the right way to be able to enter a play correctly. Now, the thing is, team, you are going to want to be able to figure out, okay, how can I enter a stock? Let's talk about entering for dip buys here. Let's think about what is the best way to truly enter. Because let's imagine that a stock does this here, team. Let's imagine that a stock goes all the way from the price of $5, shoots all the way on up to the price of $15, and now the stock is coming back on down, and we believe the best dip buy opportunity is going to be around $10. Maybe it's the 200-day moving average. Maybe it's the old spiking high from a previous day. Maybe it's whatever it may be like that, right? So what we're looking at is we know that $10 is going to be a great support line. Traders, do we just put entries of, let's say, 1,000 shares at the price of $10? Is that what we do? The entry is no. Because there's going to be many times that if we put an entry right at the price of $10, guess what's going to happen? The stock is going to do this. Fall on down towards the price of $10.02, we don't get filled, and then it bounces back on up. There will be times the stock goes to $10, fades on down to $9.90, we get out of the play, we get scared, and then the stock moves on up. What is the best way to be able to have the most perfect entry possible? The best thing to be able to do here, traders, is to go ahead and put that imaginary box around $10. Imaginary box, traders, is going to give us 3 price points. It's going to give us the high price point, right? Here's the high price point. Here is, let's say, the average price point, and here is the low price point, okay? So if we believe that $10 is going to be a great support line, what we are going to want to do is surround $10, because in the stock market, nothing is perfect. The stock market is going to give us many different opportunities. It's going to give us many different chances of success. But what we need to understand here is nearly ever do we ever see a stock just come down to $10 and hit it perfectly. So what I need you guys to start working on is averaging in on trades. We know that we are avoiding buying at the $15 touch. We know we're waiting for the opportunity to be able to get filled as it comes back down to $10. But let's say to ourselves, hey, we know $10 is an excellent area. We know we might not get $10. So what can I do? First thing that I want you guys to be able to do is say, you know what? I'm going to go ahead. If I want a 1,000 share position, I'm going to do 250 shares around the price of, let's say, 10.12. Deck, why 10.12? Because the thing is, we're close to $10, but not exactly at $10. So I might say to myself, all right, that's close enough that if we fall on down to 10.12 and maybe it hits 10.10 and I can get 250 shares, at least I'm going to be getting something and I'm going to be able to make some money as the stock moves itself on up. And that's going to be absolutely great for me. So it's basically just getting a little skin in the game. Now, the greatest thing about this is, let's say the stock does move itself back on down and we hit $10. Well, at $10, we are going to have another 250 shares. Now, at $10, we get filled. Now, if we have 250 shares that are filled at 10.12 and we have 250 shares that are filled at $10, this is going to be giving us a brand new cost basis. And what I mean by that is this is now going to give us a cost basis right around 10.06. So we also now have 500 shares. So we have a larger position. And since we got filled lower, we now only have to get to 10.06, not back up to 10.12. So before, if we just left 250 shares, it would have to get back up to 10.12 before we get back into the green. Now it only has to get above what area? 10.06 right here. And now everything above this is going to be green with more shares. So now we're making even more money. Well, Deck, what if, again, it does this? What if it falls all the way back on down towards the low point? Well, the low point, let's say this is going to be our last little bit. The low point is where I like to add the most amount of shares, aka let's say 500 shares. Why? Because this is actually at our support line or slightly underneath our support line, where we are expecting that we are going to get that dip buy. We are expecting that we are going to get that bounce play. And since this is the lowest point, this is where we believe it is the most oversold, which means that we would like to get the most amount of shares that we possibly can. We are going to get this now at the price of around, let's say, $9.92, where we believe that this is the low point. We're going to any moment start bouncing our way back on up. Now, if we have 500 shares at $9.92, our cost basis is no longer $10.06. We have 500 shares at $10.06. We have 500 shares at $9.92. What is our new cost basis? Our new cost basis is going to be somewhere right around probably $10, probably right around that, $10 mark. So now I have 1,000 shares at the price that we initially wanted, at the price of $10. And if we get that good dip buy and bounce play and we start making our way on up, ladies and gentlemen, we are going to have the best price. We are going to have the most amount of shares. We are going to be able to do it as safe as possible. And guess what? We are going to make the most amount of money possible. Right? And that is absolutely fantastic. That's absolutely great. Now, I know what's on every single trader's mind right now. Every single trader's mind is saying, well, Deck, what if you go underneath that low point? What if you go underneath H, A, and L? What if you go underneath every single one of these points? Well, right here is where you do have to have your stop loss. That's where you are going to end up taking your loss. That is where you're going to say to yourself, you know what? My game plan didn't work. You know what? My stop loss didn't work. But you know what I will show you right here? If you got filled with 1,000 shares and the stock goes from the price of $9.92 and bounces back up towards, let's say, $14, how much money are you going to make? You are going to be making nearly $4,000 on this trade. Okay? 1,000 shares from around $10 back on up to $14. That's, again, a $4 move with 1,000 shares. That's a $4,000 profit. What if the stock goes from 1,000 shares that we have, right, at the price of $10, and let's say we get out at the price of $9.80. We realize that this isn't working, and it hits $9.80. $10 to $9.80. How much would we lose? $200. So you're telling me if I jump in on this play using this strategy, yes, you can 100% lose. There's no way around that. You can 100% lose. But at the same time, guess what? If you win, you're making $4,000. So this is essentially what we are bringing up in every single one of these chart setups here. When we go over and we're taking a look at, okay, hey, take a look at this, guys, right? What do we have? Bounce play, bounce play, bounce play. These are great chances for us to be able to have success. This is where we can go ahead and use that imaginary strategy, right? Look at, again, this support line. This is old $5. We surround $5 right here. Imaginary box, imaginary box, imaginary box. And you guys can see, when we go ahead and we take a look at this, there are sometimes little lower shadows right underneath that area, right? That happens. There are sometimes that we do see plays go a little bit lower than what we expect, and that's okay. So all we're looking for is to surround that support line, give us a chance that are going to put the greatest odds in our favor. Now, let's imagine we want to short a play, right? A stock goes on a spike, and we want to reverse it back on down. It's the same exact thing. Put the imaginary box up high at resistance. Go ahead, watch that reversal back on down. Let's see if we can start fading and falling. So when we're looking for entries of a play, when we're buying, we're looking down low. We're trying to increase our odds. We're trying to give us the most reward and minimize our risk. When we're shorting a stock, betting against it, we are looking to be able to use that imaginary box at resistance, past chart history areas. Where did we see old spiking highs? Where were previous old upper shadows that we could fade and fall? Remember, we're looking to be able to increase our reward, minimize our risk. That's what it all comes on down to in stock trading, so that we can have the best chance of success, and that's when we can be able to make the most amount of money. Now, this basically ties right into our next little idea, which is going to be having a trading plan. And the idea is we always want to be able to have a 2-to-1 ratio. When we have a 2-to-1 ratio, this is going to be teaching us to always have double our win than what we had of a loss. Now, the example I just showed you was a great ratio. Had a $4,000 win to, again, a $200 loss. So when we have a trading plan of a 2-to-1 ratio, when we have a trading plan of where we're going to enter, when we have a trading plan of why we're entering on a certain stock for a specific reason, we are going to eliminate fear. Guys, fear is the only thing that holds you back. Prep is going to eliminate that fear. When you go in with a plan, you're going to be feeling really good about these plays. So let's just think about it in the most simplest terms. If we had a 2-to-1 ratio, we would say, hey, I'm going to buy this stock at the price of $2. Okay, 1,000 shares at the price of $2. If a stock goes from $2 to $2.25 with 1,000 shares, you are going to make a $250 profit. 1,000 shares at $2 is a $2,000 investment. If the stock goes from $2 to $2.25, out of that $2,000 investment, you make $250. If the stock loses 25 cents, you lose $250. You sell again your position, you sell your shares, you are either going to be getting $2,250 back in your account as you make money, or you're going to be getting $1,750 as you just lost money. So the thing is, what's the 2-to-1 ratio? 25-cent target, what's your loss? Stop loss is going to be 12 cents. This allows you to make back your losses with one win. The thing is, traders, unfortunately, a lot of traders are going to end up losing when they first start. They're not going to study enough. They're not going to practice enough. They're not going to paper trade enough. Or again, guess what? It just takes time to be successful. It takes time to learn how to be able to cope with the stock market. So the thing is, a lot of traders are going to end up losing more than what they win in the very beginning. Okay, I want you guys to understand that. So it's going to be nice if we follow this 2-to-1 ratio where we are going to be able to say to ourselves, okay, if I lose, it's all right because I'm going to make back two losses with one win. Okay, now let's go through here. We already talked about a lot of this, using our stop losses. Let's go through here and give a little perfect example of why this works. Let's imagine this is your portfolio. Deck, it is the start of September in 2025. I want to get ourselves excited. I want to get ourselves ready to rock and roll going into 2026 here. Let's again say we are starting off with a $0 profit win in our portfolio. Now, what do we have? Let's stick to the strategy. My strategy is going to be, I want to make $500 on every trade I make, or if I hit a $250 loss, I'm out. 2-to-1 ratio. Beautiful. Hey, we're first starting our trades. I end up taking a loss. I lost $250. Okay, you know what? No worries. That was my first trade. I'm going to try again. You again, stick to your rules, but unfortunately you lose, but you get out with a $250 loss. Okay, no big deal. Let's say again, you make a trade, you win. Boom. Guess what? You just made back both losses. Let's again, imagine once again, you win. Boom. Hey, Deck, this is amazing. But let's say again, you get a little iffy. You end up taking a loss right here. Okay? You get a little iffy, you take another loss right here. Okay? No problem. Let's say again you get one win. One win, boom. You get another win. Boom. Right? This is awesome. This is great. Let's imagine again, you take a loss, all right, it happens. You take a loss, all right, it happens. You took another loss, all right, it happens. Let's say again, you get one win. Boom. Traders, what do you guys realize? Let's just again count something on up right here, right? Let's realize how many losses do we have? How many losses did you just take on your portfolio? You have 1, 2, 3, 4, 5, 6, 7 losses. 7 losses have now occurred. How many wins have you had? You've had 1, 2, 3, 4, 5 wins. So guys, you have about a 40% win rate right now. 40% win rate. 60% of the time you lose. Oh, Dak, that doesn't sound good. You lose 60% of the time, but because you follow the 2-to-1 ratio, guess what you just did? You lost again $500. You made back the $500 in one trade. You won $500. You just lost $500. You won $1,000 right here. You lost again $750. You win again $500. Now again, you're up what? $1,000 over or $1,200. So essentially, look what your P&L is doing. Your P&L, even though you've lost 7 times and you've only won 5 times, you have still gone from $0 up to $1,250 with a losing rate, with again, you not winning nearly as much as you are losing, and again, you're still profitable. How are you doing that? How are people profitable when they lose more than they win? And that's because they're following that 2-to-1 ratio plan. So that's a great way to be able to have success. That's a great way to be able to continuously make money in the markets. And that's a great way to be able to understand, wow, what is going to be happening here over on these trades here, guys, right? So great way to be thinking. Now, let's go over, another areas of support and resistance here. And this is going to be trend lines. Trend lines are not just going to be our horizontal lines, or these are going to be more of they are going to be our horizontal lines. They are not just going to be our flat lines. Trend lines are going to be areas where we can see when stocks are going to have bullishness or bearish towards them in a certain trend. Now, the greatest thing about these is predictability. I hope what I'm teaching you about today and what I'm teaching you about in the stock market is fully about predictability. Predictability on entries and exits. Predictability on, again, finding the best plays, and predictability about entering these plays with confidence and conviction. That's what we want. So an uptrend is exactly what it sounds like. It is where we are going to see a trend consistently climb and consistently move on up. Now, what's the greatest thing about an uptrend? We have the answer. Guys, when we get the answers, don't we feel good? What do you mean by we have the answer? We know exactly where to enter. The moment that we have a trend line is the moment we know exactly where we can enter and be profitable. We know exactly where we can enter and say to ourselves, we should get a dip buy and bounce play. The moment where we could say, okay, if I put a stop loss underneath this area, I am now following my 2-to-1 ratio. I know I'm going to be able to have maximum reward with minimal risk. And that's where we can make a lot of cash. A downtrend is going to be the same exact thing, just completely opposite, where we are seeing a fade and a fall, and you're saying, hey, Deck, I want to go ahead and short this play. All right, absolutely beautiful. Where do we short it? Short at resistance, short at resistance, short at resistance, short at resistance. Well, Deck, what if it breaks resistance? If it breaks resistance, this is your stop loss, where you know that the stock can turn and spike, and as you guys can see, breaks of resistance is the break of the trend, where now we are going to have a bearish play now turn into a bullish play. So trend lines going to give us predictability. Now, a lot of people always wonder, how can I be able to have that validation that a trend line is going to work? It is a nice little balance. And what do I mean by the balance is? The balance is going to be the earlier you find a trend line, the more money you're going to be able to make. Now, if I could find a trend line right when it's beginning, I can make a lot of money as I can ride that trend line all the way on up and not have any fear. I know that trend line's building higher lows. I know that trend line is continuously spiking on up towards that next leg. I could be able to find a trend line early. I can make a lot of money. Now, the thing is, the later I find a trend line, the easier it is to feel confident about. I see the trend line. I see that it's holding. I see that it's working. But the longer it is, the better chance it has of breaking. Can you see where the issue now lies? Okay, so sometimes I might have to, again, imagine a trend line's forming for me to enter so that I can make the most amount of money. Or if I wait until I visually see a trend line, that's great, but that usually means the trend line's been holding for a long time. We could see that crack in the near future. Correct. So it's all about trying to find that little middle balance. Usually the best way to be able to find a trend line is going to be probably on that third touch, right? One trend line is going to be first establishing resistance. Two is going to be enforcing that higher low. And three is going to be kind of confirming it. So once you have that third touch, that is usually a great area where you can go ahead and look for entries. One, we don't really know that dip buy is going to be happening. Two, we could be able to say, wow, is that a little bit of higher low? Can I look for an entry here? Three or four right here is, wow, okay, this is the dip buy. After, again, you get your fourth or fifth touch, there is a great opportunity that we are going to most likely crack it pretty soon. Imagine trend lines or imagine support as like jumping on ice over a lake. You jump, guess what? You might jump 1 or 2 or 3 times, but eventually it's going to start cracking. Eventually you start seeing some cracks of the ice, and if you keep jumping on it, you're eventually going to go through. So the thing is, the more you jump on the ice, the better chance you have of cracking it. If I jump on ice 2 or 3 times, I might be okay. But if I jump on it 8 times, eventually you're going to crack. Same exact thing with going up through resistance. Just like I showed you this example. We had 4 different touches. Eventually, we break through that resistance and we start moving ourselves on up. So it's always great to try to enter earlier over on these trend lines. So how do we draw trend lines? Do we connect lower shadows? Do we connect the body of the candles? To be frank with you, it's about what makes the most sense. Let's not be so specific where we are trying to connect every single uptrend or downtrend. Let's not try to connect every single real body of the candle. Let's not try to connect this or that. All we're trying to do is connect to what makes sense and what visually gives us the easiest answer. What is going to put the odds in our favor? Right? So if let's say we go to today, right? I have no idea what's going on today, but let's say we go over to a 2-minute time frame of today. Can we find any clear-cut trend lines that are going to make sense for us? Well, traders, what I am seeing over on ALLR right here is I would say there is a clear-cut trend line. What I would do is connect the dots here, right? Connect this dot to this dot to this dot to this dot. Would everyone here agree with me at this moment that this would be a great trend line over on ALLR? ALLR, I think this would be absolutely awesome for us, where we can clearly see where it's bullish, right? And if I spell bullishness correctly, it would be easier for you to understand. So what we have right here is we have clear bullishness, clear buying volume, clear hype, clear momentum. And then on top of that here, we do have bearishness. We do have, again, where people are getting weaker and fading and falling and dropping. So now we already have our answer. Everything that I've told you, everything that I've already gone over, we are now, again, being able to find our predictability. We know that we have our touch right here. Beautiful. We have a touch right here. Beautiful. We have a touch right here. Beautiful. If we entered on any of these, there's money making. There's money making. There's money making. But the issue is if we crack. And the longer we bounce off of it, the better chance we have of eventually cracking and most likely falling down to the VWAP. And if we fall on down to the VWAP, you could look for a dip buy there, but you got to have a stop loss underneath that. And if that cracks, again, things will get very ugly and start getting very weaker. But the thing is, traders, this is great. This is awesome. Now, not only can we see that there's an uptrend, but I'm also going to say there's an uptrend as well with maybe some resistance. Right? Would you guys agree with that? That maybe every single time, and this is just, doesn't have to be perfect. It just comes on down to giving us a good idea of where a stock may reverse at. So now again, if I'm trading ALLR, which is the #1 top gainer in the stock market today, right? ALLR right here, currently up 114%. I could see that over on my trade idea scanners. I could see ALLR this morning. Guess what, guys? Top gainers with news here today. What was the #1 top gainer with credibility? Oh, wow, look at this. ALLR, 3-star press release. Granted, a fast-track treatment for cancer. Okay, that is absolutely awesome. I can get more details, so we do have a good, credible press release. As I said, it's not tough to find the #1 top gainer of the day. Literally, all I do is open up my Fox Runner scanner every single day, and I say, oh, wow, ALR, best #1 play. Okay, go over to my news alerts. Today's a full watch list. ALR, #1 stock to watch. ALR, up 80% on the day. Okay, what's one of the top plays? 80% gain, ALLR. Right? As I said earlier in this lesson, it's not difficult to find the #1 top gainer. We have all this amazing equipment and scanners that are just going to give us the answers. But again, where you have to actually be successful is saying, where can I actually enter? Where can I feel good? Where do I have a price point that I could be able to make money? Right? So as you guys can see right now, look what's happening. Whoa, ALLR, guess what we just saw? This is awesome, traders. I love the fact that I'm teaching right now in real time, and we are seeing exactly how these trend lines work. Guess what? We just fell through the ice. didn't we? We just fell perfectly through the ice. We know we had 1 bounce, 2 bounce, 3 bounce, and guys, guess what? We're bouncing on that ice. That ice could crack. That's where predictability is. This is not recorded. This is not this is literally live in this specific moment. What I am teaching you right now is what you can apply to your trading, and you can see it works. You can have all the confidence of what I'm teaching you right now on this is what works, and this is how traders and this is how Wall Street traders predict the stock market. This is how, again, you guys can be able to make a lot of money, and this is how you guys can be able to make a lot of cash. Okay? So, you guys are absolutely great in every single way to be able to make money, and you guys can be able to make that big time cash and be able to make that big time money. So beautiful, guys, right? Absolutely great in every single way. All right? Absolutely awesome in every single way. Traders, let's keep this party going. Let's keep going to our next area. Let's keep making our cash. Let's keep making our money and what we can be able to do next over on these plays. So the next thing that I want to be able to talk about right here, and actually, let's just give a couple examples over on these trend lines. A couple examples over on the trend lines. SPHS, trend line forms, stock starts getting weaker. SGY, trend lines form, stock starts getting weaker. AQST, trend lines form, stock starts getting weaker. You can clearly see, where the bullishness is and where the bearishness is. And I think, again, it doesn't matter what chart you look at, you can clearly see that over on ALLR, the pure example of what we just had right at this moment. So let's keep on moving here, traders, and let's go to our next opportunity and what we want to be able to learn. And I think, again, what we want to learn next is what a lot of people get excited for. And that is going to be our breakout chart setups. Breakout chart setups, breakout patterns that are leading towards huge rips, huge runs, huge opportunities, and huge climbs. So this is what everyone always is asking. What are the best patterns to be focusing on when we're taking looks over on these plays? Now, traders, what we always want to be looking at is these U-shapes and triangles. U-shapes is establishing resistance, U-shaping back up to resistance, and breaking on out. Triangles is going to be a stock getting tighter and tighter and tighter and tighter inside of a wedge, and that's where we get our very big breakouts. So when we're talking about breakouts, remember how I talked about, in general, do not buy at the break of resistance. It's always smarter to buy at the break, at the bounce off support. These are going to be when that resistance actually does break. When we actually break through resistance, when we actually see that happen, that 1 out of 10 time, that 1 out of 5 time that we move on up, it's either going to form from one or two ways. Number one, it's establishing resistance right here. And guess what we do? The stock falls on down, breaks on out above that resistance, AKA we formed a U shape. The other opportunity is when a stock is going to go on a very big spike. We find resistance right across the board right here. And then the stock does what? It consolidates. And as it consolidates, it gets tighter and tighter and tighter until we get that breakout where we have, guess what? We have that triangle. Now, can anyone see anything that has already happened, which is enforcing once again everything that I'm teaching you? Because what I just taught you, didn't we see that perfectly just occur over on ALLR? We saw the channel and the dip buy and the bouncing, and then we saw that we broke in real time together, that we fell underneath the ice. How perfectly this worked. Now, just from that small little inch of U-shapes and triangles, can you guys see ALLR's breakout? ALLR, this is the #1 top gainer of the day. This is not recorded. This is not anything. This is today, right now at this moment. Do you guys not realize that here's our strong resistance going across the board, and now again we have that nice little triangle? Would you guys not agree that that is a bull flag setup leading towards that big time breakout? So ALLR, what do we have? Here's top resistance. Absolutely beautiful. Notice again what we have right here. Stock is again getting tighter and tighter and tighter. As that stock is getting tighter and tighter and tighter, we have this nice wedge. As the wedge is now forming, we have bada boom, breakout buying volume starts moving on in. Deck, what do you mean by breakout buying volume starts moving on in? Well, again, you can see at the very bottom of the chart, I don't look at this often, but you can see larger green candles. Larger green candles, larger buying. We see where the hype is starting to move in over on these plays. So U-shapes and triangles. That's what we're looking for. Breaks of resistance is where the hype is going to be moving on in. So let's talk about some of the most popular patterns there are for you guys to be able to make the most amount of money. One pattern that I do like, that I see a lot, especially for, again, smaller penny stock traders, is going to be the $1 breakout. One thing that you guys will always want to know is there's a few key points on every single breakout play. They all have a few things in common. Number one, they all have massive volume. Number two, they all have extremely low floats. And number three, The longer a play cannot break resistance, the bigger the force it's going to be when it breaks on out. For example here, traders, let's imagine, just hypothetically, let's imagine no one has ever thrown a baseball 100 miles per hour before. People throw 99, people throw 98, and it takes 100 years, and finally someone throws 100 miles per hour. That might be a big deal. Why would it be a big deal? Because it lasted 100 years before, again, we broke that area. When you have a strong resistance or a strong support line that has lasted a very long time, when it cracks or breaks above it, you are going to see a very strong move. So, what I want to talk about is kind of those top 3 things. Number 1 is we want to look for a lower float. When I'm referring to lower float stocks, I'm referring to stocks that are sub 10 million or lower. We talked about what the float is. The float are the shares available to the public. The lower the float, the lower the supply. When you have high demand, aka higher volume, you're going to see a very big breakout. So, what do we have right here? We have right now, just took the number 1 top gainer spot, HKPD. HKPD is up 108%. Notice where it says FLT right here, 3. Now, why is it saying 3? That means 3 million in float. When we have 3 million in float, such as over on HKPD, now we have all this buying volume competing against this. So for instance, imagine if we had 3 houses available for sale. 3 houses available to sell, and 100 people want those 3 houses. Well, only 3 people out of the 100 can get it. So the price is going to get bidded up extremely high. So you guys, again, you go in the housing market right now, it's very competitive. There's not many homes for sale. People want homes. Guess what happens? The price goes up even higher. It's the same exact thing in the stock market. Take a look right here over on the number 1 top gainer, HKPD. HKPD is the number 1 top gainer with a 110, 111% gain. If we go over to statistics right here and we scroll on down, what do you guys realize? It says 3.42 million in float. Anything sub 10 million is a low float. Now, if we go ahead and we go back over towards summary, we know we have 3 million shares. On a normal day, out of the 3 million shares, 1 million shares are traded. So out of a normal day, 1 million shares out of the 3 million are traded. Guess what we have right now? The volume today is 51 million. That means that 3 million shares has been traded over and over and over and over and over and over and over again. People are buying shares, waiting for the price to increase, selling their shares. Someone else buys it, waits for the price to increase, sells the shares. They buy it, wait for the price to increase, sells their shares. Those 3 million shares are in high demand. Usually, guess what? Usually, this stock is only getting 1 million shares traded out of the 3 million. There's shares left over for everyone, which is why on a normal day, HKPD doesn't do anything. But today, HKPD has all the hype, has all the buying volume, has all the attention. So this is what I want you guys to truly understand about these plays, where we are seeing what? We are seeing low float, we're seeing big volume, and that is leading towards the breakouts. Now, Deck, I'm already seeing some of the things that you taught me. What are you seeing right here? Do you guys see a U-shaped pattern right here that leads towards a little bit of a breakout? You guys see a little U-shaped pattern right here that's already leading towards a little bit of a breakout, right? We want to see, start looking for maybe these U shapes and triangles, start looking for these ideas. So I like to test myself. I like to go through like some top gainers every now and then and just, ask myself, do I see anything starting to form? Like for instance, I see a very big spike over on STKH. I see a big U-shaped pattern starting to form. But please remember, guys, something. What do we need to remember? 85 cents going to be strong resistance. It's not going to be easy to break above. Same exact thing with the VWAP. VWAP is going to be strong resistance. I do not want to get you into the habit of just buying at the highs. And again, I truly want to enforce that. Now, the thing that I was talking about before with the $1 breakout is the longer we are underneath $1, and when we eventually break $1, the more hype we will get. So the trade that we're sitting on, MSTR, this is almost like an opposite example, is what do we have on MSTR? MSTR has been able to hold the 50-week moving average for about how long? For the last 2 years. Bounce play, bounce play, bounce play, bounce play, bounce play, bounce play, bounce play. If MSTR cracks this area, something that has been a significant support line for 2 years, that is where we are going to get a very nice breakout. It would be the exact opposite if let's say we break 345. 345, we hit it, we got rejected, we hit it, we got rejected, we hit it, we got rejected. We basically have been sitting underneath 345 now since what area? Since, November of last year, almost the last 11 months. So the thing is, MSTR, imagine what would happen if maybe we formed one ginormous, big wedge pattern right here. Let's turn off the indicators here for a second. And you guys start seeing, show indicator, you guys start seeing this huge wedge pattern, this big triangle start forming. What do you guys think would happen if all of a sudden this stock over the next few months or over the next 6 months gets tighter and tighter and tighter inside this wedge and eventually squeezes and breaks? I mean, it would be a massive explosion. So the thing is MSTR going to crack this area and fade all the way back down to 250? Or is this the perfect dip buy opportunity on an uptrend before, again, we start moving ourselves back up in this triangle and hopefully get back up towards around that 440, making it a giant wedge pattern? So remember, everywhere we're looking for these two shapes. We're looking for U shapes. We could see our first big U shape get rejected. Now we're looking for this triangle, higher lows and consolidation, holding this uptrend, right? The longer, again, something holds, the better. But again, when it breaks, it's going to lead towards very big action. So again, $1 is one of those perfect trades where if you ever see a stock that's under $1 for a long time and has a low float and the stock again is looking to be able to move on up with big volume, you could see a very large breakout and a very large move. And that's something that's exciting, and that's something that's very cool to be able to see, and that's something that brings in a lot of excitement into the stock market every single day. As you guys can see, little U-shaped breakout patterns right here. Establishes resistance, U-shapes on up, breaks resistance. Remember, I'm not opposed for you guys looking for buying up breakouts, but please have a stop loss in case it does not work. Support is always going to be a better area to be able to get involved in. As you guys know, low float can be any time frame, 1 minute, 2 minute, 3 minute, 5 minute time frame. Watch for a break of the resistance in that U-shaped breakout pattern. As always, large volume is a must. Must be a top gainer play. Top gainer could be a stock with hot news. Top gainer could be a stock that has some sort of gap up. Top gainer could be a stock that has a lot of attention for whatever reason. Next very hot pattern is going to be a red to green move. This is going to most likely be when a stock has a good credible press release in pre-market, has a large gap up, and since it has such a large gap up, you do get a little sell-off right at the start of the day. Or sometimes it's from the stock being a previous top gainer, has a little bit of a gap down, that selling momentum still holds, and before it U-shapes its way back on up, to get a nice big spike. So for instance, here's a good example of it. The RGSC was a previous top gainer. The stock opened on up, and guess what? It faded on down at the start of the day. We moved ourselves back on up, broke through the open, and that's where the stock had a nice explosion. It went red on the day, then went back green on the day. And this is what gets a lot of people excited. When a stock goes red to now going green, when it breaks its opening price, that's where people get excited. It's the same exact thing right here if I took a look over on CATB. Stock had good news. Stock had good news, had a nice little gap up. Since it had a gap up, people took profits right at the start of the day, but now it has good news and the stock came on down towards more of an affordable dip buying price. U-shape happened, broke through the open, people start getting that hype. Bull flag patterns. Bull flag patterns. Low float, big volume, looking for consolidation and looking for that wedge setup. Once we have that wedge setup, that's where again we see the nice explosion and the nice move. Exactly what we just saw over on ALLR, the pre-market top gainer of today. Stock spiked on up, formed consolidation. That wedge got tighter and tighter and tighter while building those higher lows, and that's eventually where we got that nice breakout. A different form of a bull flag is going to be an ascending triangle. An ascending triangle pattern is going to be almost the same exact thing as a bull flag pattern. They're just going to be different on how the top is established. When you have a bull flag, a lot of times you're going to be building lower lows and higher lows, basically forming more of a flag looking pattern. An ascending triangle is when you're going to have strong top resistance with higher lows. So for instance, you're going to have resistance be established and then you build higher lows into the wedge. Regardless, if you see a wedge, if you see a triangle, something spectacular is going to happen in the corner of the wedge. It's where all this volume is going to be flooded in, and again, eventually we're going to see some sort of break. Mid-candle breakout pattern, one of my favorite patterns out there. Stick with me right here, traders. This is how the mid-candle breakout pattern works. You're going to have multiple days. Usually, again, day 3 or day 4 is when you have a spike. Day 1, we have a press release come on out. It says stock has cured cancer. Okay, that's an example. The stock is going to go on a 200, 300% move. The next day, since it's gone on a 200 to 300% move, the stock has now fallen on down about midway. Now, why is it falling after good news? Because the stock just spiked 300%. People are going to take profits. Now, day 3 is where traders say, hey, it's now a dip buy opportunity. This stock just went on a massive rip and run. Yes, it fell yesterday because it went on such a big spike, but people basically shorted it and sold their shares all the way back on down. I want to re-enter on it because it did have good news 2 days ago. So where would this example be? Like BSPM, massive spike. Stock falls back on down because people take profits and then people realize it's a great dip buy opportunity. Let's enter back in, which leads towards usually brand new highs. Stock goes on a massive spike, falls back on down to mid candle of the entirety of the spike, finds again support, moves its way back on up. Stock goes on massive spike. The next day again falls back down to mid candle. People again look to see where this one's going to be heading towards, gets that nice big breakout. So the thing is, traders, this only happens on the daily chart. This does not happen on the 1, 2, 3 or 5 minute chart. Everything else can happen on a minute chart. These happen on a daily chart. Same exact thing with a descending triangle pattern. A lot of times descending triangle patterns will happen more on a daily chart, not a 1, 2, 3 minute chart. So again, a descending triangle pattern is usually when you have a massive spike, the stock fades and falls and drops until we find a great dip buy opportunity. Stock squeezes and breaks its downtrend. So imagine if we had a big rip and then day after day after day after day, it forms a downtrend. Now, after we cross that downtrend to the bullish side, buyers move in, and we start getting an absolutely great breakout. For example, right here, KONE. Stock goes on a massive rip, forms this downtrend. Look what happens when we get to the corner of that triangle. We find support, we have the corner of the downtrend, buyers move back on in, and you get an explosive day. Same exact thing with JAGX right here. Stock again had a massive rip and run. Stock again starts getting tighter and tighter and tighter on that downtrend. We finally break that downtrend. That's where we get a lot of hype. That's where we get a lot of momentum, right? So traders, these are breakout patterns, and we've talked about, where to buy them. Remember the A, B, C, and D. A establishes resistance, B is the pullback, C is the higher lows, D is the breakouts. Same exact thing with over on triangles. Triangles, guys, we have our A, B, C, and D. Let me show you what we have over on A, B, C, and D over on our triangles, because again, we showed you guys over on U-shapes, but what about triangles here? Again, U-shapes, very simple, very easy. Spike, fall on down, get the breakout. Remember, A establishes resistance. B is going to be a stock falling. C is going to be where a stock is going to start building higher lows. And D is going to be our breakout. Fantastic. Amazing. Now, where do we have triangles? Triangles are going to be a little bit different. We are going to recognize triangles by seeing, number one, we have a very nice spike. A establishes resistance, right? B is going to establish our first little bounce. Then we're going to have C establish our higher lows. And D is going to be the corner of the breakout. A establishes resistance, B establishes the low, C is going to be our higher low, and D is going to be our breakout. Whereas our triangle, top resistance going across the board right here. Then on top of that here, we have our higher lows, stock again building higher lows, and all of this buying volume is getting tighter and tighter and tighter and tighter and tighter until foomp, you get that breakout to the upside. Best way to always think about this, guys, very simple analogy is just going to be, imagine if there was a big lake. Big lake right here. And guess what? When you look at a lake, it's very nice and calm. But what happens at the very end of the lake? There might be a river. Now, if all of this water pressure is feeding into this one little canyon, that's usually where you have all this crazy white water rapids where you have very high water pressure because everything's getting feeded into that corner. Same exact thing when we guys are taking a look over on, let's say, these triangle patterns, right? If I took a look over on ALLR this morning, we have all of these traders, right? We have ALLR this morning. All of these traders are doing what? Feeding into this little tiny area, right? We take a look over on this play. What are we realizing? Wow, there's top resistance. We have this nice little triangle. We're feeding all into this area until boom, we get that explosion. So ALR, this explosion all happened because it was all feeding into that one little area. Notice, traders, what are we seeing right here? We are seeing that we are back inside of this wedge. We are back inside of, this channel pattern. Traders, if someone asked me right now, Deck, where would be the best dip buy? Best dip buy is going to be right where around that lower shadow just came on down to 204. So stock actually did what? If we wanted to break down ALLR today, we had a beautiful channel pattern. bouncing off support, top resistance, bouncing off support, top resistance, bouncing off support, top resistance. We fell through the ice. The stock cracked underneath. We again went bearish on the day. After that, guess what? We U-shaped our way back on up, exploded back on up, hit again some old spiking high resistance off this resistance line. And now guess what? We're probably going to fade back on down towards around that 205 mark. If we come back on down to 205, that is now going to be continuously keeping this going for the bounce play off this area. And let's see if we could possibly get that. I want to see if, maybe ALLR is going to bounce off this area and keep this channel alive on what was this morning. So ALR, absolutely beautiful so far. Still, again, just, following the same exact setup that it has been. And this is what we're talking about. We're always just trying to find predictability. If someone said, Deck, what's the perfect way to trade LR? Short it here, short it here, short it here, short it here, and short it here. Deck, what's the best way to, again, buy ALR? Buy it here, buy it here, buy it here, buy it here, and buy it here. Right? That's what I would do if I were you. And then once you buy it, you short at the red line. You again short it, you sell it at the purple line. You buy it, you sell it at the red line. Just go back and forth over and over and over again. And when you see that, that's going to give you the best example of success. So ALLR, still in play, still a stock that you guys would want to continuously be watching, focusing on, and seeing what we have over on these plays. Let's keep this party going here, traders, because we've gone over a lot of great things. We've gone over a lot of great setups and a lot of great plays, but let's start understanding more about how the stock market works, guys. We've gone over support and resistance and trend lines. We've gone over, again, float. We've gone over volume. We've talked about what to look for, but let's also start understanding a little bit more about how stocks work. Now, I've given you guys the very small example, the very small briefing about this, psychology in the stock market. But this is your new superpower. Your superpower is understanding how stocks are going to go, because you're understanding not what you think is going to happen, what everyone else thinks is going to happen. So, what's psychology? Does anyone know? What is psychology? Psychology is the scientific study of the mind and its functions. We are understanding the mind. We're studying on how people think. How are you thinking? How is your mind thinking? Your mind might be thinking, I want to buy ALR. Cool. That's what you're thinking. But remember, guys, you are one fish in a giant ocean. A lot of times, if you want to be successful, you need to think, how is everyone else going to want to buy? Now, if you want to make a lot of money, you are going to have to do things differently than everyone else, because people lose. But what does the majority of people do to lose? They wait till a stock goes on a big time move, then they buy it. They see a stock going on a big time rip and run, then they buy it after they feel confident, after they see so many other people made money. Oh, so let me make money. You're late to the game. You have to be ahead of what we call the mob. The mob is the majority of buyers. If you beat the mob to a stock, if you beat the mob to a play, the mob will buy in after you. And if the mob buys in after you, that's where you make a lot of money. Unfortunately, yes, guys, it's a dog-eat-dog world in the stock market. If you get in on a play and everyone else gets in after you, you will make money because everyone else is buying in after you. That's how you have to think about it in the stock market. You have to say, I need to jump in before Wall Street jumps in. I need to jump in before Wall Street Bets jumps in. I need to be able to get into this play first. So when everyone else buys it, my profits are getting pushed up as high as possible. That's what you have to think about. So how do you think about that? You have to think about it in a more of a psychology way, but also a sociology way. Now, sociology is the study of groups of the mind. So again, we can understand ourselves, but can we understand how everyone else is perceiving that play? So that's how we're trying to mix it. We are waking up every single morning and we're not sitting down and saying, what am I going to trade today? I'm sitting down and saying, what is every single else? What is every other trader going to trade today? That's what I'm thinking about. I don't care. I have zero preference. I don't care if I play stock XYZ, ABC, DEF, GHG. You could say, Deck, I like this play. Hey, me too. I like that play as well. As long as I believe other people are going to like it, right? That's what investing is. Investing is trying to find businesses. Investing is companies, stocks, before it becomes appealing and attractive to others. And if you can find that, so how do we know it's appealing or attractive to others? Well, there's a few different ways. Number one, guys, is we could start seeing an increase in volume, right? We start seeing a stock start, hey, we have 1 million shares over on this trade. All of a sudden, maybe today we have 2 million or 3 million or 4 million or 5 million. We start seeing volume start increasing over on these plays. But let's think about it. Why would volume increase on a play? Well, the majority of the time, it's because they have some sort of news behind it. They have some sort of press release behind it. If you have a credible reason on why to buy, it's going to make people want to jump in on this play. This is why Fox Runner is the number one tool that I use, is because if we can find every single morning what is the reason why these plays are going to take on off, that's where I'm going to be able to make money. So what I do every single morning here, guys, is I look at these press releases. Okay, this is what I do every single day. It's so simple, it's so easy. I want everyone to be able to do it as well. Here is this is what you do. Okay, come on over here. Go over towards additional filters on Fox Runner. We're on the Fox Runner scanner, by the way. And all we're going to do is go to 0 to 20 million in float. Because guess what, guys? There are 10,000 active plays out there in the stock market. We do not care about the majority of them. If I go over to finviz.com here, just to give you guys a little bit of a reference, I go to Finviz and I click screener. There are 10,362 stocks that I can go ahead and trade right here and right now. Do I want all of these plays? Not at all. What I want is I want to look for the lowest float plays, stocks that are going to actively spike and move on this day. These are the lower float plays. So I'm going to under 20 million. Guess what? We just got rid of 80% of fluff. 80% of fluff. Those are plays that, again, not even worth our time. So now we only have 1,900 plays out of the 10,000. Now, out of these 1,900 plays, guys, probably a few hundred of them are going to come out with news every single morning. And those are the news that we are going to want to be focusing on. So what I'm looking at is 0 to 20 million in float. Now, what I also know is news is going to come out at 7 o'clock, 7:30, 8 o'clock, and 8:30 every single day. So if I'm again staring at this scanner during the hot times, the stocks with low floats are coming out at 7 o'clock, 7:30, 8 o'clock. And if they have hot keywords, those are the ones that are going to make me the most amount of money. So it's very simple. If I wanted to say, hey, Deck, I don't want to have any, I don't want any stars. And again, this is what like most press releases are at, where there's like no stars in any sort of way. There's no help in any sort of way. It's like, it's all bland and boring. And let's imagine again, there's no keywords. Okay, now there's no keyword. Guys, this is very tough. It's very tough to be able to say, oh, what's the best press release? What's the best stock? Because it's so simple for me to say, oh, hey, go buy the best press release. Well, the thing is, the reason why I use Fox Runner is because it tells me what's the best press release. I want to turn on what's the best of the best. Give me all the hot keywords, positive phase data, positive drug trials. Show me what's approved, what's getting received, what has achievements. Show me again what's completed, what again has the best press release. So we always get a star rating. On top of that, I add my own keywords. I add the keywords that I think have the best opportunity success. And then I also add voice alerts to it so it reads out when a hot press release comes on out. Because yes, at the end of the day, it is first come, first serve. When you are the first one in on a play, you make the most amount of money. So guess what I'm doing here, traders? I have the hottest keywords set, I have the rating set, and I have voice alerts set. Let's see what happens at the time of 8 o'clock. All of a sudden, hey guys, it's 7:59. Let's watch to see what comes out with under 20 million in float that has a low press releases. Let's see. 8 o'clock, ALLR. 3-star word right here. 3-star word showing me what? That it does have the treatment of cancer. Guys, this is absolutely fantastic. Treatment is highlighted for me. That's a 3-star word. Cancer is highlighted for me. That's a 3-star word. This stock, ALR, is bringing in hype, bringing in attention, right? We can already see cancer is one of those press releases that I absolutely love. Agreement, treatment, one of those press releases I absolutely love. One of those keywords that stands out to me. I also have it over on voice alerts as well. So if we are wondering, how do we find these press releases so quickly and so fast? It does come on down to, number one, it's over on the Fox Runner scanner. Number two, it's posted 30 seconds later on the Fox Runner analyst play as well. And now I'm beating the mob. So ALLR, guess what? If you're finding this at the price of 8 o'clock in the morning, what time is that? I mean, where is this stock at? It's at $1. It's at $1 before it goes on this 100% move. If you find it at 8 o'clock, or maybe you find it at 8:05, or you find it at 8:12, or you find it at 8:30, you're 30 minutes in. You're still beating 99% of the mob. And it's one of the best press releases because it has credibility behind it. So ALLR right here, this is one of those plays that even if you were late by 30 minutes, you could still make a lot of money over on this play. Notice ALR trying to get a little bit of a dip buy and bounce off the trend line right now because that is where the bullish trend line and where buyers can move on in. But again, trend lines, and we're thinking about it, is where is everyone else going to want to buy here? Every single person is looking at the number one top gainer because it had credibility this morning and is now saying this is the stock that's going to be able to make me money. So the mob is extremely important to be able to learn and study, thinking about the majority of buyers and where they are going to be heading. So the mob equals the majority of buyers, the majority of traders that buy anything that moves. Over 70% of stock traders fail while less than 30% succeed. We talked about why is that? Because they're always chasing the top. We have to be a leader, getting in first, having confidence. Traders, you know what's the greatest thing about buying in first as well? Is if we are so low on the play. Let's say we jump in on ALR and nothing happens. Okay, nothing happens. It's not like the stock is going to come out with positive drug treatments and dumps. That rarely happens. Has it happened? Yes, it has. And sometimes it's weird, but it's like a 1 out of 100. The majority of the time, you're going to jump it on a play. The stock is going to go on a massive spike and rip and run, and you're going to be one of the first people in. In rare cases, you're going to jump it on the play, and it does nothing. And guess what? You get out of the play. No harm, no foul. In extremely rare cases, you're going to jump in on the stock, and it's going to dump off of positive news, which is extremely rare. Right? But the mob is essentially like these seagulls from Finding Nemo. Mine. They're all just copying each other. That's what the mob is. The majority of buyers, they have no idea what they're doing. The majority of retail traders have no idea what they're doing. They're just following what their favorite person on social media says, and they're just buying at the very tippity top. So, why is it that so many traders lose? Guys, how does this make sense? How do so many traders lose when there's so much opportunity to be successful? Right? Doesn't that blow your mind? It blows my mind. It really does. Because there are so many chances that you guys can be successful in the stock market. Number one, you guys can enter early. This is where, let's say you guys are using Fox Runner, you guys are getting in early, you guys are all set. 2% of traders are going to study the news, get in right when things open on up. That's beautiful. The majority of traders are going to enter right when a stock starts picking up a little bit of hype. Maybe the stock starts picking up a little bit of volume. Maybe the stock starts getting a little bit of hype. Maybe the stock starts getting some action. And the majority of successful traders are going to get filled when a stock starts spiking up towards new highs. Now, the most traders are going to lose though. And why is that? Because now the stock has already spiked. The early traders are already in. The breakout traders who got in, they're getting ready to sell. Now, the majority of traders are buying at the very tippity top, basically just giving an exit to the earlier guys here. Remember, stock spikes up, 100%. I'm getting out. I'm not buying at 100% gain. Are you crazy? But the thing is, this is where emotionally we're connected to it. Wow, it's a great spiker. Emotionally and visually, we see that it's a winner. Wow, it's winning. Other people are making money. I can make money on it. Let me buy at the worst price possible. That's where the majority of traders buy. Then again, guess what happens? The stock starts falling. And you can make money, of course, as you short the stock back on down. Again, you could short it right here. You can make money. Or again, you can make money as the stock again goes all the way back on down to the dip buy opportunity. So now it blows my mind right here. How are you not a full-time stock trader? How are you not a successful stock trader? How are you not making hundreds of thousands of dollars? How are you not doing this every single day as a living? How are you losing so often? Guys, you could have bought in early. You could have bought in right when it starts breaking on out. You could wait till it gets to a top and short it. You can go ahead and wait till it falls apart and dip buy. Why are you constantly losing? Because you're buying at the very tippity top over and over and over and over again because you can't get to the fact that your emotions are leading you down the wrong path. Your visual is setting, hey, it's at the top. People are making money. You should be making money. Oh, let me go buy it right now when it's all the way up 175%. You got to get off that. Because if you don't, you're just going to keep losing every single day, and you're going to just keep getting angry, and the next thing you know, you're going to get a divorce, you're going to lose the kids in custody, you're not going to be... Well, okay, hold on. Maybe we're getting a little too carried away. I just don't want you guys to end up taking a loss, all right? So, how do I get in that top 20%? Right? We have our early swing traders. We have our breakout traders. We also have our shorters. We have our dip buyers. There's so many places that we can be successful. So we just study, we have experience, we do the work as you guys are watching right now. And then one of the biggest things is, of course, being aware of it. It's hard to fix something if you're not even aware of it. And again, probably the majority of traders that constantly lose aren't even aware that they're losing so much. So different ways to be able to find the mob and be able to beat the mob, right, guys? Well, we're looking for those hot press releases in pre-market. We know that the mob is going to go to the number one top gainers. Where's the hype? Where is the excitement? We can study. We can look at Wall Street Bets. We can go on Twitter to kind of see where the majority of the buying volume is at. Right? Understand how the mob works in different market conditions. Some days they're going to be stronger than others. Some days we'll see Reddit, attack a certain play and it takes on off. And some days, again, no sort of buying volume really moves in. So what would you guys say are the market conditions right now? Right? What would you guys say is the market conditions right now at this moment? Well, right now, again, we do have ALR currently up 132%. HKPD up 89%. S&P 500 at this time, slowly trying to get a little bit of hype. I would say it's like six or 7 out of 10. We're not seeing a 300, 400% top gainer. We're not seeing, again, every single play take on off. But could you have made money on HKPD today? For sure. Could you have made money over on ALLR today? For sure. Could you have made money on a few different plays? Absolutely, guys. Right? There are many different stocks out there that you guys could be able to make cash on and be able to make money on. There's definitely, chances of success, even again, following this trend line and seeing what this trend line could be able to do for you. So the thing is, there are chances and success. There's probably 7 out of 10. It's not 10 out of 10. It's not 0 out of 10, but it's definitely very solid. All right.